Welcome everyone, Richard here from Hola Prime.
Hello.
Joining me, Igor, Troy. How's it going, guys? Good stuff. Good
today.
stuff. Nice meeting you, Troy. I believe Igor, first time with Troy as well. Good to have you on board.
Thank you.
Yeah. So as always, guys, if you've got any questions, please drop them in the chat there, and either one of us will respond. Hope you enjoyed the session. And I don't know, Troy or Igor, you want to take things away?
No problem. I can start for the today, just basic things. Let me start for the calendar today, just to get some things. So today we got two important things that we watched in the Forex market. One was the Bank of Japan policy rate, which was expected 0.5%, and other thing was related to the retail sales for the US dollar. So the both things that we watch, actually everything is as we expected. Bank of Japan didn't increase interest rate. They talking about that there is a chance to do that in September, and which can really push US dollar Japanese yen down if that happens. However, right now we are sometime in some kind of the range, and we are struggling either on bullish side and the bearish side. Related to the core retail sales and retail sales in US, it's something that we can see for all economic news that we had in the last 1, maybe 2 months. Because of this tariff war, we got a lot of bad results, and we can see the minus 0.3% from expected 0.2% for core retail sales, which I think that a lot of traders do not count a lot of in trading right now, because in last 2 months, based on my statistics, I do not see any reactions of this news in any important way. So we can see maybe half hour some kind of the spikes and nothing more after that. Now let me go to the charts just to show what I'm looking for and what I like to trade here. So first, as you know, I'm watching mostly, and my favorite currency pair is British pound dollar. And here is something which is very interesting for me. Actually, if we watch British pound dollar, it looks like a bearish trend on intraday level. However, it looks and a bullish trend at the same time. If we just watch a relative strength index trend line, which have a of the bullish structure yet. Okay, sorry, this is the choppiness index. Sorry, I just the wrong trend line. So we can put a trend line like this, and we still see some kind of the bullish trend. On 30 minutes chart, it's maybe a clearer situation than one, which is usually not so often. As you can see, if we go till the June 10th, so 7 days in the past, and write this kind of the trend line, we can see how we keep this kind of the bullish trend yet, and we didn't break completely this trend, and we see a lot of push up, a little bit higher, etc. What is the interesting right now is if we see, for example, in last hour when we got this bad news for the US dollar, we didn't got a push higher. So we got really bad report for retail sales for the US dollar, and instead, because of that, to go up, we are starting to go up right now, but with some kind of very slow regime. One of the explanation of the market right now is maybe because it's June, and a lot of traders going to the vacation, etc. And usually the second part of the June and the whole July can be very small, that we can see very small volatility there, and can be really boring market for trading. What I want to show you too is my indicator, and you can see that the choppiness index, believe or not, is around 70 on 30-minute chart, and the same picture is on the 1-hour chart, which means that we have clear sideways market. So there is no clear trend for British pound dollar, and the same situation is for the euro dollar. As you can see, the choppiness index is very, very high, and which means that right now either we want to buy, we want to be on the buying side because we really have a strong push. We touched ultimate weekly highs, and for euro dollar and for British pound dollar. I think for British pound dollar, this is the highest high in the last 5 years, and the euro dollar very clear for that. So we're really, really in bullish trend related to euro dollar and British pound dollar if we watch the 4-hour and daily chart. But on intraday level, we are in sideways market. So the best thing, in my opinion, right now, if we trade a euro dollar, British pound dollar, is to be a little bit sideways from the market. So without trading, just to wait some good level, either to buy some low level or maybe some high level where we can make a short-term short trade or something like that. But right now, it's as you can see, very, very choppy market, and this is really unusual. Why? Because if we go and made analysis of the choppiness index, you can see that usually this kind of the moves are in the Asia session, not in the moment when Euro and US session overlap, in the moment when we should have a US Open in that kind of the stage. So this is very, very bad market for trend trading right now, and I will avoid any kind of trades without any stronger push, either upside, either downside. Related to my trades, if anyone watched the session yesterday and in Friday and Thursday, I had a couple trades related to the gold and related to the Euro Aussie. First, I will go to the Euro Aussie because my trade for the Euro Aussie, I went into the trade at around level 1.78, and after that, I keep this trade very long time. When I say very long time, I told that my trade will be, several hours. But as you can see, when I draw a trend line on Euro Aussie, this bearish trend started on Thursday, June 12, 5 days ago, and we are still in that bearish mood. Maybe right now we are trying to break this bearish tone, but we were really in bearish tone, but we couldn't reach my target of 1.7615. The good thing is I closed my trade. It's profitable. It's no problem with that, but I couldn't wait anymore because market was so slow, and I realized that I have slow bullish divergence. I will just show that on the chart, the choppiness index. This is the I see in the last few hours, actually. If you watch the relative things, last few hours, I didn't feel comfortable anymore, and I closed my trade somewhere between maybe less than 100 pips profit. But that trade was a really low risk trade, and that ended related to the Euro Aussie. And for my gold trade that I made yesterday, that was very interesting. That was very, very interesting. And what happens yesterday during the US session, Jannie and me, we created gold trades. Jannie purchased gold and I sold gold. And it was really, really, really interesting. On the 4-hour chart and daily chart, we are bullish. If we watch a 4-hour chart for gold, it's a really, really bullish trend. There's no problem with that. On daily chart too, we're very close to the ultimate low, ultimate high. So everything is clear. The gold is bullish. However, what's happened is that I analyzed on 1-hour chart the gold, and I saw yesterday that we starting to go down. As you can see, this was that movement. So as you can see, since the Friday up during the Monday, we really were in some kind of the retrace, and I hoped, my goal was this red line here. Why? Because this is the volume profile. This red line represents a point of control. Actually, usually on that price level is the biggest liquidity and the biggest number of buyers and sellers together, which means that price oscillates around that level too much. And my target was that level because I thought we can easily reach that target. On the other side, Jannie had this stop loss around 3,380 level, somewhere here, and he was, I can tell he was very close and very right here, because we had a little bit lower than that, but we are keeping above that level. And last couple hours, I see the push as similar as the euro dollar, pushing higher. There is a big chance that after this opening range, we break this trend line here, and the gold maybe can go higher today. So I closed my trade with a minimal profit, nothing special there, but I protected my capital, and euro Aussie and gold, the both trades are closed, and I do not trade them anymore. As we can see, and for gold, we can see the choppiness index very high, which means that we have some kind of the range and sideways market, which imply that we need to be very cautious because we don't have a clear intraday trend. However, like I said, we're pushing a little bit higher, and that can be maybe interesting. So based on these three currency pairs that we analyze, now we can check the godfather of all these moves, USD index, because as you can see, the US dollar index actually is choppy. It's sideways. It's in some crazy range here. And that range is whole day. From the beginning of the day up to now, we are in that very tight range. And I think that tight range still is not broken, and we need to see what can happen here. So there are two possible ideas here. The first idea is that US dollar index start to go down, while British pound dollar, euro dollar, and gold start to go up. And then we can try to retest this very strong support on the 97.66 level. Why this support is so strong? This is very strong support because this price level was multiple time high, weekly high and weekly low for the US dollar index. Several years. If you go, for example, on a weekly chart, you can see these levels that were very actual, very important. For example, in 2022, and then in 2020, and etc. So it's important because of that. And one more thing, if some traders use Pitchfork, for example, as a tool, which is I really know that you like that. So if you apply a Pitchfork, you will see, if you take a Pitchfork on various lows and highs for the last year, for this year, for a couple of that Pitchfork you try to add on the chart, you will see that this price level is median of that all of that. So some kind of the middle price, some kind of intersection, and which means that this price is really, really strong. Either that it's not strong on the weekly and monthly chart, we can see on the 1 hour chart that we one time retest, second time retest, third time retest, and maybe we can try to retest one more again, because the market trying to go there a little bit. But I don't know where the market will go right now. It can go upside, downside. There is some kind of the bullish divergence, as we can see the bullish divergence of US dollar index, but low. Everything is hardly to predict. I don't like this kind of the market and shape of this market. It's very hard to trade, because whenever you enter into the trade, you just see how price oscillates, neither up, neither down, neither there. You just feel that you just made wrong decision. You always have some kind of the feeling that this is the wrong decision, because the market is really, really sideways without any clue. And I want to see anything, either downside, either upside. Just move, please move, so we can find a good setup and enjoy trading. So this is something that I'm watching right now. And the last thing that I'm just to monitor and can be interesting is our indices. I know, Richard, that you trade a lot that. I like when NASDAQ retests a 50 moving average and start to go up. And in the same time, S&P 500 and Dow index are bearish, because we talked a few times. I talked with you, Richard, about that. NASDAQ can be very, very often a leading indicator. First NASDAQ start to be bullish, and then Dow and S&P 500 started to follow the NASDAQ. And I like when I see that in the market, and that's forming of the bull trend. So I would like to see how market will respond. Will we maybe the all three indices start to go up during this US session? So we will see. Of course, right now we are nowhere. We are some kind of the consolidation phase, and which is interesting, the choppiness index for NASDAQ is very, very high. Look this, it's very high. If you go in the past, you will see that we didn't have such a choppiness like now. Look this, the whole June, the May, we didn't have so big sideway market as we have right now. So this should be some kind of the warning that to be very, very caution. And I think, Richard, that your strategy that you try to catch the small move during the US session, maybe the only strategy that can work in this kind of the choppy market.
Igor,
yes.
On a higher time frame, on smaller time frames for sure, I do agree. Troy's going to look at, I believe, the ES and the NASDAQ for us today, so we're probably going to give him that to look at. I mean, that's his primary markets. Is that right, Troy?
Sure, but Igor, you can leave your chart up. I was going to ask you the question on the choppy indicator, your chop indicator. Is that indicative of choppiness, or are we at a place where we're maybe topping out?
This choppiness index is just a function that measure logarithm of average daily true range, and watch the lows and highs and how that is looking for. So if the market is going in some trend, for example, bullish or bearish, it will be below 50. If it's going above 50, that means that market is sideways. So it's just indication. I use that sometimes. I avoid trading where the market is sideways, where is outside of the anything, and I just wait for some signal, and then I enter into trade, because sometimes can be very, very dangerous to enter into the market. I would just give you one example, which usually helps me in trading. For example, during the Asia session, euro dollar and British pound dollar usually have very, very high choppiness index. And then during the Frankfurt Open and UK Open, we got some huge swings. And in that moment, choppiness index start to go to the 50 level. And in one moment, when I see the choppiness index start to go below 50, usually we start to go in some direction. Usually it's the middle of the UK opening range or something like that. And major trend for that session forming. And I like to enter then into the trade and to follow that intraday trend. So this is how I use this indicator just help me avoid trading. Just that. Just for that, nothing special. It's not so complicated indicator. It's very simple, very similar to relative strength index indicator.
Nice. Igor, we got a question there from Andre. If you don't mind to address that quickly.
Yes.
Andre's asking pound US dollar intraday.
Yes, I
breakout areas.
will. So I will just read again. So Igor, British pound dollar intraday, what are the breakout areas? So everything stays clear as it was in the last couple days. So our level at 1.362 is resistance, and this is level that we couldn't break last couple weeks. And on the downside, we are the next maybe moment that can be interesting is first this low that we had yesterday. It's around 1.351, I can say. So these are two levels. It's a very huge difference between that two levels. One is on the down of the average true daily range. Other is an up. There is almost 100 pips to play around that levels, but there are only two levels that I watch right now, and it's a really tricky to trade. Because the movements are very, very sideways and slow. So right now I'm just watching.
Cool. Well, thanks for that, Igor.
Thank you.
Troy, do you have something to show us there? What are you watching today?
I am riding. I feel like I'm riding shotgun with you guys, but it's kind of the reason why I'm getting this week and next week. I'm in a couple of sessions is to get an idea how you guys are presenting and what your focus is. Obviously, with Jannie and Paul last week, it was we hardly ever showed screens, and I think they were having a good time. Asking me questions about the political environment here in the U.S. And I'm happy to share my opinion of the political situation here. From a ES and an NQ perspective, I agree with Igor that we are definitely in the choppiness.
Yeah.
In fact, we're in a band that we're in a band that goes all the way back almost a year, where we're just across the very top of the highs. We just stay in that consolidation band. Now, in the short term, I think you will agree that there's been a little bit of a bull flag on both the ES and the NQ, and we sort of broke out of that a couple days ago, but we're still in the bigger picture. We're in this big consolidation band from way back, and we just can't seem to get out of this consolidation. And this talking about choppy, yesterday we're up, today we're down, vice versa. It goes back and forth almost on a daily basis. I don't know whether this is the market topping out and we're just going through a topping out period where it's consolidating to then go down, Or if it's more traditional technical analysis, is that, anytime we have a consolidation band, it means that the market is acquiring energy. It's just chop, chop, chop. More and more energy gets trapped in this consolidation band, and it's going to break one way or the other. And of course, a bull flag is bullish, is going to break to the top side, especially since our long-term trend, our very long-term trend, is up. So you would expect the bull flag to break to the upside. That being said, we've got some major headwinds, at least in the U.S. First of all, we have, a political environment that is, I'll try to keep this PG rated. Okay, it is. Let's just say that it is. There is polarization on both sides of the street, and as a kind of a funny sidebar, I live in a subdivision, about 200 homes, and we have a homeowners association. We had a meeting just recently, an annual meeting, and it was literally like you took the neighborhood and divided it in half. These people were screaming about this thing. These guys were just as passionate on the other side, and I'm sitting here going, my fee's $100 a month, $100 a year. I don't care. I don't care, but it's the polarization, at least.
But a clear divide.
Very clear. And
it's really weird that you say that, Troy, because even here in South Africa, I mean, with the tariffs and all that stuff that's been implemented, the US aid that's been pulled, you're either all pro or not. It's like a clear divide. And I don't know if, for you, Igor, how we just sit on the sidelines here and watch things. I mean, we recently had our president in the Oval Office and got a little bit tapped on the fingers there. Rather embarrassing in my point of view, but, trying to stay away from the politics side of things. It's now all these riots and all that sort of stuff. Is the market sort of like, waiting for an explosion each side, up or down? What's going to be that trigger? It's difficult. Definitely interesting times, that's for sure.
Yeah, my concern is that because there's so much domestic, what do we want to call it, toxicity, that what concerns me right now is that in the past, presidents, other leaders, anytime they have domestic troubles, the easiest way to defer that and to get out of that is to defer to something else. And unfortunately, we've been given this opportunity or potential opportunity with Israel and Iran. And this to me is this is what I'm worried about, is that because there's so much domestic infighting, and it's nasty. I mean, it's toxic. It's just horrible. That the president is going to shift gears and try to push this to an outside, something else that needs to be looked at to defer away from what's happening here at home. And we're going to get drawn into this Iran-Israel debacle. Okay. Now, I don't want to stand on whether or not Iran should or should not have nuclear weapons. I'm kind of an anti-nuclear everyone. I don't think anybody should have nuclear weapons. But that being said, it's almost like they're getting set up. It's getting set up. You can almost see the pieces in play. As an example, we have watchdog groups here, and they've been talking about how our U.S. military has been shifting assets to the Middle East for about the last month. So it's like there's already this buildup in anticipation. You can never get a good deal whenever you put one country distinctly at odds and put them in a corner where they have no choice. If you do get a deal, they're not going to agree. They're going to agree to it on the surface, but in the background, they're going to be doing something else. Pushing Iran into this deal while Israel's bombing them, is not exactly, you really want it to be two sides coming together with a mutual plan, a mutual, goal, so that the deal that is made is attainable from both sides. And I don't think we're getting that. I think they're strong arming Iran, and Israel, of course, is doing the majority of this. And I understand Israel's position, that they don't want Iran to have those nuclear. That being said, it's almost like they felt like maybe the U.S. was going to give a little to the Iranians to get a deal, and they said, no, if we can't, we have to strike now before there's a deal. Otherwise, we'll be stuck with whatever the deal is, right?
Yeah.
So anyway, I don't want to get too deep into this, but I think that it would not surprise me if suddenly the U.S. gets involved, and especially whenever the president comes out and says, well, if we've got 35 bases in Iraq, or wherever they are, and if they get attacked, then we're in. It's sort of like saying, please attack one of our bases so we can jump on the bandwagon and get involved. So I don't know. I'm really concerned about that. And I think the market it's not risk off and it's not risk on. It's risk I don't know.
Yes.
And so that's why your chop indicator is maxing out, because the market just doesn't know whether it wants to go up, whether it wants to go down. And I find it highly suspect that bad news is not creating down moves. They're ignoring the bad news. And you said that earlier in your talk, that we get bad news today. Retail sales were bad, but the market's the market's not doing anything. And yesterday we had Israel was actually hitting or trying to hit a oil refinery in Iran. That's not good news. Not only from the Strait of the waterway, but also because obviously if all, and I say all as in Europe, South Africa, US, if oil goes up, what happens? Everything else goes up, because oil, in either a purist as a fuel, but as chemicals, as plastics, and all the derivatives of petroleum, it means everything goes up in price. So, we just got a shot in the arm of more global inflation due to this. I mean, so there's so many headwinds going on. I'm having a very hard time taking alongside in this market.
I feel the same with that. It's especially with the NASDAQ and the ES being so close to all-time highs, and now all of this is happening. I mean, there's been a lot of parallels that's been drawn to the price behavior of that sudden downturn that we had in February, the strong push back up again. I think when was it 1928? I can't even remember the date. Don't take me on my word there. But there was a situation where price came very close to wiping out that entire decline, and then just fell short of the all-time highs, and then we start seeing one heck of a decline again. If you speak to your Elliott wave dudes, I mean, I take that with a pinch of salt, but all of them sort of thinking that we're either going to push a new high and then get the big decline, or the big decline's already started, or more sideways volatility, which I've been actually saying is probably what we're going to be seeing in the bigger picture for, I would say, up until the end of the year. Huge ranges, fluctuations. Now we're talking daily time frame, whatever the case might be. V-shaped bottom followed. Now we've just been pushing straight up. Now we sort of there at that brink of breaking out, but it's not. Is all of the global conflict and what's happening in the US, all that division, is all of that actually going to be the crack of the whip now to give us another decline? And I won't be surprised if that actually happens. I won't be surprised at all.
I have one question for you. because you are there in the fire. So you are in the U.S. and you can understand better than me. So there are two things that I want actually to ask you. One thing is your opinion about this tariff war, and what is how people react about tariff war, and where is that leading in point of view as a average American. And another thing which is very important for our Forex traders is the federal funds rate is a 0.5%. We expect on Wednesday again to have a nothing neither decrease. So again 4.5%. But what I want to see is this is how I understand that Donald Trump, he wants to decrease federal funds rate, but Fed didn't do that. And this is how I see that. Can you tell me what is your expectation about that, and how do you see that stuff related to the interest rate in US?
Well, first of all, the Federal Reserve has a dual mandate. They're trying to stabilize prices and to support employment. And so there are going to be times when those two ideas conflict. And before I get into this, first of all, you have to understand I'm a macroeconomic guy. Okay, so I love the macro side. And I think we are very fortunate to have set up our government so that there are competing branches to try to keep power, an equalization of power. And the fact that the Fed is semi-autonomous to the political maneuverings of those who must not be named. So I think that the Fed is okay. So unemployment's bad. High unemployment is bad. Low or super low unemployment is also bad. But from the Fed perspective, inflation is the boogeyman. Inflation is the boogeyman. We are going to do everything in our power to control inflation. If we have to sacrifice jobs, that's just part of it. Okay, that's the way the Fed kind of thinks. And so and I agree that I do not like the standard answer is, what does the data say, right? Let's wait till the data. And we get this from, the ECB says this all the time. Well, we're going to be data dependent. We're waiting on data. And the Fed does the same thing. I think that that's the most conservative way to look at managing the overall economy, even though there's a lag time. So when the Fed raises rates, there's a lag time before that actually hits the economy, and vice versa lowers. We lower rates, everybody's not going to go, ooh, let's go spend money. It takes time for that to kind of flow through the market, flow through the different levels of the economy. And so I think that the Fed is by far more concerned about inflation than they are about employment. And so they are going to do everything they can possibly do. Now, obviously they're walking a very tight line because Trump is putting pressure to lower rates. The problem is that to lower rates, we need to have a slowing economy, first of all. Second, we have to have inflation at least on a trajectory to the downside. And we just don't have, we don't have evidence of any of that yet. On top of that, the tariffs have a built-in inflationary bias. All right. If China, and this is the way it works. I mean, there's so much from a macroeconomics perspective. There's so much research that's been done on tariffs that the academics have pretty much, there's no discussion. Tariffs are bad. Tariffs create, intra-country problems that do not help either country, right? And we've studied this over. I mean, that's like economics 101. If country A does a tariff, country B responds by raising rates, by raising prices. When prices go up, what happens? Demand goes down. If demand goes down, country A is still is going to pay. They're going to buy less because it's more expensive, and country B will then have to lay off workers and reduce production so that supply goes down. And we know this was a push and pull between supply and demand and prices, right?
Yeah.
And tariffs just muck it up, really muck it up badly. And so the only time that in my opinion, the only time a tariff is a positive thing is when you have a new industry. Say a country in South America suddenly finds iron ore, and they didn't have this before. Yeah. And now they're competing with all the other people who have iron ore to produce iron or to produce steel. And it's a brand new industry. That's when a tariff can help give that struggling industry a chance to become competitive with the rest of the world. Those are far and few between. And they should be very, very careful how they use those tariffs. Those tariffs should be short term. They should have okay, we're going to have a tariff. We're going to give you guys 10 years, but in 10 years, it's a level playing field and you better be up to speed. You give them a specific time, and you don't go with 150% tariff, because 150% tariff is going to what? It's going to stop demand. If we stop demand, both countries majorly suffer, right? Yeah. And so the tariff is just a nightmare, period, no matter how you slice it. Now, the good news is, I guess it's good, is that it's called the taco trade. If you're familiar with the taco trade. Mm-hmm. So taco, everybody's calling Trump the taco, TACO. Trump always chickens out. That's what it stands for. It's a phrase on Wall Street right now, that Trump will always back off. So he sums out with 150% tariff, and by the time we're done, it's 5%, right?
Shock and awe.
Yeah, right. So it's the come out with the big stick. I'm gonna beat on you, and then no, let's be friends. Kind of thing. And it's very frustrating on our side too, because we're seeing prices are just now starting to go up, and the retail sales were down. I think we're going to continue to see that over the summer as more and more goods that are coming in are elevated, because what happens, it's just like anytime you have a rise in taxes or a rise in tariffs, and tariffs is a form of taxation, the companies will take part of that. So if it's a 5% tax, they'll take half of that, and they'll just take a lower margin in order to maintain demand and maintain their price. And the other part of that then flows to the supplier, and sometimes the supplier will also take half of that, and so you end up with a very low net price increase or decrease. However, you're penalizing the one country as well as the supplying country, and of course that will then have ripple effects over time. In the U.S., there's been a crazy amount of pressure to not raise prices, and there's been a lot of pushback. GM, Ford, Walmart, these guys have all basically told Trump, hey, we're going to have to raise prices. And he's like, no, don't raise prices. And so on one side, you're punishing all the shareholders that own Walmart stock, and you're hopefully benefiting the populace of the U.S. Anyway, it's just a complete mess. And I think that as we start seeing the Fed's going to do absolutely nothing until it has to. And I think that that's because the political side is so ugly. If they cut rates preemptively without the data, they're capitulating to Trump. If they don't and the economy gets worse, then they are shucking their responsibility to maintain the economy, right? So they're screwed regardless of what happens. But they don't want to look like they're caving into Trump. At the same time, they don't want to be preemptive and try to guesstimate what the economy is doing without hard numbers. Yeah. So we're sort of stuck in this, I'm doing nothing until I absolutely have to. And, yes. You know, Europe has lowered rates many times. You're definitely on a downward rate cycle. And the U.S. is not. The U.S. has just stayed. But that's because inflation, we cannot afford inflation. Because of our debt, which is a whole nother piece to this picture, is it makes total sense to lower interest rates, because then we pay less interest on all of our debt. But at the same time, when you lower interest rates, what happens to the price of the dollar?
Yeah,
the dollar goes down, right? Because it's not as valuable. It doesn't get that 4.5% interest rate. It only gets 3.5% interest rate. Well, now I don't want to own dollars. So there's so many push and pulls. You know, I think we're at, like I said, I think we're at a tipping point. We are either going to top out here as the data starts coming in more and more negative. And then once the Fed starts lowering rates, you know, it's going to be a rush to the bottom. And if the U.S. starts lowering rates, I think all the other countries will also lower rates to keep their currencies. I mean, my God, look at the euro. It's a 115. You know, it was only, I just took a trip to Portugal in January. It was $1.03. I mean, I could turn around and do the same trip for 12% less, right? Just on the currency exchange. Yeah. So, you know, Europe can't afford for the euro to go to 120, right? So they'll cut rates. They'll try to keep that euro, you know, where it's at least in a certain range against the dollar or against the yuan, right? Yes. So I think, you know, you opened a huge can of worms with this question. You know, there's so much going on politically, worldwide. You know, haven't even talked about the shift from, you know, manufacturing in China to trying to shift that to other places. You know, and is that going to change the entire flow of goods over time? What happens if the Chinese, the middle class starts buying? I mean, that's such an untapped resource. India is another country that I'm watching. India is middle class, is starting to make money. They're starting to have disposable income. And that has the potential to change the world. 100 million people suddenly have money to do something. We don't know what they're going to do with it, but you know what I'm saying. I am very concerned about the U.S., the leadership, the mess. It seems like instead of staying in our lane, we have to be in everybody's lane. You know, so you're in Russia, you're in Ukraine, you're in Israel, you're in Iran, you're, you know, yelling at Jordan. It's just like, no, we need to really stay in our lane, fix our problems. You know, and you don't say all of a sudden, I'm going to cut U.S. aid because we can't afford it. Well, that's a good reason to cut it, but maybe you should say, okay, maybe there's some waste in there. Let's evaluate. Yeah. Let's see which countries really need that aid. You know, let's have some sort of.
So many countries been very negatively affected with that.
Yes.
But I understand at the same time, you know, that if it is wasteful expenditure, then, like you said, at least, you know, take a step back, assess the situation again. But, you know, as things go, it can be quite idea, what he thinks could just like be implemented at a whim. So it is it's a difficult situation. But anyway, I'm not going to try to get into the politics side on my side, but I do 100% believe what you're saying there is to be true. Troy, we also got some responses here from Robert. I don't know if you can see the chat there, Troy.
I cannot.
Yes.
So on the right-hand side there, you should see the chat or the common sense section.
Got it. Okay.
Good morning, Robert, by the way. You're still on your way to work, I believe. All right.
Robert is from US.
Yes, I think Robert is from the US.
Yeah.
Well, sure. I think the last comment there, Robert, the poker face is only a poker thing, only works in poker. I think that what happens is in poker, what happens is you figure out that your opponent has a tell, and you can see when they are bluffing and when the poker face no longer works. And so the question is what is Trump's poker face, and at what point does China say we are not going to talk, we're not listening to what you're saying, because you've bluffed so many times before. And I think that that's the biggest concern is in this negotiation style, is that at some point everybody knows you're calling the bluff and that you really don't want to do whatever you're saying you're going to do. That unfortunately becomes extremely dangerous, because I think that Trump is going to get pushed into a corner where he has no alternative but to dig his heels in and stick to it, and that becomes very, very dangerous. I think that we may see this play out in the Iran-Israel thing, where Trump comes out and says, if there's an attack on a U.S. military base, we're going to go in all in. And the question then is, does he do it or does he back off? And I think he's going to get pushed into a place where his bluster is going to force him to actually follow through, and that will be a very negative thing. I just think I think it could be very, very dangerous if he gets into a position where he can't save face, right? And that's where it gets really, really ugly.
Yes.
Troy, I'm just taking a small trade on crude oil. I'm going to quickly run through that for you guys and the reasoning behind this. I'm taking a little stab at it. It missed most of a really nice move, but I don't think it's too late. So let's have a look quickly. Let's just share the right screen here, and I'll quickly talk you through that. Should come up now. Right, got my trading view chart here. Crude oil on a daily. Myself, and obviously I think the whole world was probably thinking that crude oil was in some sort of a descending triangle. I actually had a good conversation with Howard, which is quite into his Elliott wave analysis. And we both tended to agree that once a triangle of any sort, especially if it takes a really long time to form, when they do tend to end and price actually goes into the direction, in this case a descending triangle, bearish triangle, that you got to be quite careful, because that quite often triangles are quite often the penultimate correction within a, let's say, bullish or bearish phase. In this case, we had a bearish phase. Now, I'll talk about the trade in just a moment here that I took. It's just an intraday trade type of setup. But yesterday or last week, we were looking at this bounce to the upside, and we were reckoning that price would potentially reach this little gap that occurred here towards the or the beginning of April. And as you can see, I've also got my pitchforks here. They were my pitchforks using a shift pitchfork. Now, beginning last week, we were looking at first objective around about 67.52, which was this, how can we say, upper red dashed warning line. And then price very farly exceeded this upper red warning line and also broke this lower high that was set, and again, in the beginning of April. So this could potentially be, as they would call it, a change of character or break of previous price structure, right? So whereas your previous price structure was bearish, price made its move upwards and broke this lower high. Okay, didn't do it by quite some distance, pulled back again, and again, price is in this case rather well respecting this shift pitchfork that we have here. The reason I have a shift on here is if I use a standard pitchfork, then price is sort of like went below the boundaries of this lower median line. One could say it has now reached the center median line and it's failed to close above there. All right, it did wick above it. I'm still expecting some more upside potential here. Maybe on today back to this median line around about 73.46. So that was just a bigger picture sort of expectation. If I have to drill down to a smaller time frame for you guys, you can see that I had a green zone over here and another one over here. Now this I actually did prior to our session today, and how I found those were basically using a pitchfork again.
Yes.
Where is that pitchfork gone now? There we go. This one I should be using. There we go. So in this case, with price being so close, it actually just took out these highs that were set yesterday. My expectation was that whatever, if we would get a little decline, and this was before our session, price might find support at either one of these boxes and to, at the very least, take out yesterday's high, right? Now it's already done that. It did achieve that objective, although I did not get into this trade down here. I'm actually trying to get into it a little bit higher up. Currently, we might be seeing some sort of a 1, 2, maybe a third, maybe correct a fourth with another push higher. So that is my hope, my expectation with this trade. These little boxes that I drew there basically support at this lower dash median line here. If you draw a pitchfork sloping to the upside from this low on Monday to this high on Monday, Monday's high to this high low over here that formed today actually during the overnight session. You can see how well price has been sort of fluctuating between the lower median line and the center median line. It's actually been finding support quite a few times here at this 50% dash median line. Now, too early to say 100% which pitchfork setting is the best to use here, but if you use a shift pitchfork, you can see price just tagged that lower red warning line here, or the 50% dash median line perfectly, which is also where I had that box. Now, to be honest with you, did want to take a stab at this as price actually before our session moved lower. And this is now using my order execution platform here. Another piece of information that you can be using here is just to draw a trend line from this low. Come on, this platform does freeze sometimes. From this low over here to this high low over here. And all I did was then copy and paste it and projected it from this high low over here. And you can see that's sort of 3 different areas of market geometry where price basically found support. and a strong, nice move to the upside. Now, typically when price reaches these market geometry lines, I would like to see some sort of reaction from them. So you don't just go and place orders there and get into a trade. I should actually be sharing that screen over there. So you can see I've got the order active over here. Just trading a very small lot size. Got my stop low, this low over here, around about 71.39. Again, guys, I'm looking here at the CFD side of things, not the futures, all right? And then I've got my target all the way up here. I'm going to change these colors a little bit later, aiming for a 1 to 3 risk-reward ratio. Okay. So I was talking about how I get into trades, and I wasn't showing the right screen there. So I'll just quickly show you on my trading view chart. I think that is probably the better way to do it. You can see prior to the 9 a.m. mark, price came into that area, it bounced higher. As price moved lower, there were a lot of bearish fair value gaps that occurred to the downside. I'm just going to make them, let's say, red for bearish. Well, let's not do that. Black, and let's color that red. All right. Then we had another one over here. Price moved into that area, attempted to make its way back to the upside again, but then at the 9 a.m., boom, straight back into this lower area over here. And this is a trade that I actually missed the setup on. But if you were to look at what I can use for potential entry visuals, let me just hide that. Is same thing here. As price spikes into that lower area, there was a fair value gap that formed, and price immediately reversed back to the upside again and broke the bearish fair value gap, creating an inverse fair value gap. And we had a retest of that area later again. That would have been a sweet spot to get in, and a strong move back upwards to the upside. So, yeah, unfortunately missed this entry and this one here while we're having some nice chats on our side. But just from this move from this lower support area that I drew earlier on prior to our session, let me just get my path tool out here. This could potentially be a 1, 2, 3, maybe corrective, whatever the case might be, with another move higher, as I mentioned. So I got in round about these lows over here, and again, hoping for a further push to the upside. Although I do have a higher target objective around about 73.27 level.
Yes.
Which is just over a 1 to 3 risk-reward ratio. I'll actually go and color these things maybe a different lighter green so you guys can see later on when I do an update on this trade again what the hell is actually going on here. But that's the trade. That was the setup. Yeah, basically just performing top-down analysis, higher time frames, lower time frames, using market geometry on crude oil today. Swinging or sloping these angles into different directions, and when you do find these confluence areas, generally that is areas that price can target and find support or resistance at, and also then present really good trading opportunities, right? But rather than just placing orders there, like limit orders or resting orders, we'd like to see some sort of sign of a reversal, which is why I like to then drill down to a way smaller time frame, see if there's any sort of bearish fair value gaps that occurred into that area, and if they then get swiped to the upside, they become inverse fair value gaps, which can then also be an additional sort of sign, if I want to put it that way, that the market's actually getting ready to reverse. All right, so that's the setup in crude. Let's see how it goes.
Good luck, Richard.
Thank you. Igor, do you spot something on your side?
Yes, I will just share my screen. A couple things happen in just a half hour. So what I'm looking for right now is I'm seeing a little bit bearish outlook for a British pound dollar. So actually, as we spoke, we got bad results for a US dollar. That should expect a bullish price for the British pound dollar, but we have that news rejection. And last 3 hours, we are bearish. And as we can see that today, from the early morning, the highest high was around the 1.35, 80, 90, that period. And however, right now we are approaching to the low. We are at 1.3529. The next level of the confluence is 1.3570, which was the lowest point of the June 13, and then we can see maybe the bigger gain. But like I said, I think that 1.35 should hold today. But for the tomorrow, I don't know anymore. So, like I said, even that looks very good. We can already have some kind of the intraday bearish trend. I'm out of this trade because I don't have nice levels. We are not so good either for buy side, either for the sell side. So I'm out of this trade, as same as I'm out for the Aussie dollar, which is trying to break. And I'm watching Aussie dollar, for example. On Aussie dollar, we are some way we like starting to go out of this range, but in the end, when you analyze the price, this is
messy.
Price
Igor,
is going to more up, more down. Yes,
we are losing you.
You hear me well?
But you're fine now.
Oh, no problem. Excellent. Okay. I will try to restart lately. Sometimes when it's crowded, there is a problem with that. But anyhow, when we analyze this, we can see that it's really uncommon movements right now, especially for Aussie dollar. So look, it's like I watch the report from the earthquake. Just the up down, and bigger and bigger amplitude every single time. So this is not good for trading and good for traders for sure. As same as Kiwi dollar, as you can see, the same pattern, just increase amplitudes all the time. So like I said, British pound dollar went down. It's good for the traders that catch maybe some higher level. We got a very nice level during the US Open around 1.357, and if someone catch that price level now is in very, very good shape. I think more than 40 pips in profit, and this is really good.
Okay.
I'm glad that price is going down. Better setups in the future, because I think a couple hours ago it was really, really hard to trade with that price levels. So we are approaching that level, which is around 1.351 or 1.35, somewhere there. Maybe there is a chance maybe that we can go either lower, but I don't know. What is very interesting for me, when we get the news, and news are good for British pound dollar, and British pound dollar reject that news, that circumstances, and start to go down, that means usually that the big players, they want a bigger correction here, and there is a chance that we can maybe see the lower price if this push today stays and we go outside choppiness. So it's a really interesting here. I will start. We'll avoid buying British pound or euro dollar to the end of the day, because even that we are low, even that we oscillate, the price oscillates and everything, I think that there is nothing that can push the market in one in another way. And I want to buy only on very, very low prices and vice versa.
Gotcha.
So this is
Igor, do
the
you
thing
trade
here?
because you're in Europe, right? So you trade during the London session as well, primarily, or on the pound US dollar and euro US dollar?
Yes, of course. I trade and euro session and US session, so there's no
US
problem
session.
with sessions. Only I'm always try to get a good price. The problem is to get a good price, and
wait for your level.
this is the hardest way.
Yeah.
Yes.
The waiting.
Yes. So this is yeah, this is the really interesting. I think that the price for gold yesterday was very interesting. I will just show you something because you ask very good question for yesterday. Just show that on the relative strength index indicator to see better. So this was the trend. This was the trend, and just before the U.S. Open, or I think in the end of the Asia session, we started to break this down, and this price started to go down, and we got a push downside, and this is the moment just before the U.S. Open, and what I did, I wait during the U.S. Open to see higher prices, and when we reached this second bullish candle, it was just in the end of the on the U.S. session and beginning the new hour and everything. I wait for that moment and enter into the price, and after that we got very, very nice 3 hours move down, and after that market was choppy. But what I like to see is when we break some trend line and we break some moment on the chart, I like that retesting period that we try to, we break simple moving average 50, and we try again to retest or something. That's beautiful. That's really beautiful, because you get one beautiful chance to get a profit just from the market that retesting or recover from the drop. But it's very important that you are 100% sure that breakout is a clear breakout. That's important.
Gotcha.
But look this for the gold, for time when we broke the trend line, and that's beautiful. That's really beautiful, because after that, look, after that, how strong push downside we have.
And that blue horizontal level that you got
the problem
there on the
that
top,
I missed this on the top. Yes, it was the highest level that we got. Yeah. It was the highest high of the June 13 on the Friday. Yes, and it was as you can see, 3 times we retest that price level. One time early morning on the June 13, then during the US session, then on the end of the day, and after that 3 times retesting and rejection, we started to go down. But the problem was, in this period of time, the price was over, and the only thing that I could trade, and I trade, is to wait for some little pullback so I can enter into sell trade. But it's not powerful like you enter just in the moment when you're at some high or something like that.
Okay.
So this is it. This is
Troy.
This is it.
Troy,
this is it.
what is
I
your
think
strategy today?
The call from the White House.
I'm sorry. Can you say again?
Yeah, sorry. We're just having a little bit of a voice issue there. Thanks, Igor. Firstly, I was going to ask Troy quickly. What do you look at, Troy, trading wise, strategy wise, volume, price structure, scalping? Swing.
Definitely scalping. Definitely
Okay.
scalping. You want the secret sauce, huh?
Yes, please. I can't wait to see it.
Always.
So I am a contra trend trader. So,
Okay.
you know, when the market's going up, I'm usually losing money because I'm going short. But for the
Because
most
the
part,
day.
yeah. And this is obviously something I need to work on is to I want to buy high or sell highs and buy lows, right? And so I was actually very interested in Igor's charts because of his RSI. I am not an RSI fan, but I like the concept of overbought and oversold. I use MFI, which is the money flow index.
Yeah.
And actually, this is not to harass you at all. Currencies don't have a volume component, so RSI is the better choice. Where MFI, it has a volume component.
Yeah.
And so for futures, the volume component is a piece of the supply and demand, right? And so I use MFI as my oscillator instead of RSI or stochastics because it incorporates the volume component. So I use the MFI for an oversold, overbought. You know, so I'm only going to go long if it's oversold. I'm only going to go short if it's overbought, as a filter, sort of, or as a confirmation. I see so if I see a double top's one of my favorite double tops and double bottoms in a very short term, and if it comes up to that double top and I'm not overbought, I'm going to avoid taking that trade, right? So,
and which time frames, Troy?
You're going to hate me. You're really going to hate me.
1 second.
No.
I use a 30-second chart, and I trade. I actually use a 30-second as a front runner, and I trade off of a 1 or a 2 minute. So my entries are actually off of either a 1 or a 2 minute, but I'm using a 30-second as my leading indicator, so to speak. Gotcha. Very, very short term. I do somewhere between 10 and 50 trades in a day. Wow. You know, I'm looking for in the ES, I'm looking for 5 to 15 ticks. You know, if there's momentum, I'm willing to hold on longer, obviously. But I'm playing that little, you know, it's gotten too far, so I'm going to short it. It's gotten too far, so I'm going to go long. And I'm playing that reaction. So my favorite spot to short, and it's all about timing, of course, is when we're making new intraday highs. We make that intraday high, it pauses. I short it, it drops 5 to 10 ticks, I'm out. Okay, that I'm playing that little reaction to the breakout.
Are you trading the minis or the micros or vice versa?
I do both. On the NASDAQ, I trade the same strategy, but I'm going for obviously a lot more ticks. I'm usually going for 20 to 40 ticks instead of the 5 to 10 on the ES. I actually trade the NASDAQ more than I do the ES because there is more reactionary movement. So I can make more money faster trading the same basic setup versus the ES. When volatility gets even higher, I continue to move towards the NASDAQ. I initially start with a 20 by 20. So I initially am a 1-to-1 risk on the ES. However, I almost always adjust my 20 tick risk to chart structure. So as an example, if I'm shorting very close to the high, I'm going to move that stop down. If it takes out the high, I don't want to be in it anymore. Okay. Yeah. Also, I'm predominantly short trader. I trade. I mean, I'm not very tall either, but I predominantly am a short side. In fact, to my detriment, unfortunately, I will short. If you're talking about it, I'm already short. Okay. I mean, that's just sort of the way it is. In fact, when I do, long-term trade evaluations, it's between 60 and 70% of my trades are short trades. You have to twist my arm and pull it behind my back to make me go long. And I guess it's just because I've become very skeptical as a trader that I don't believe the move. I don't believe the move. It keeps going up. It's really hard right now because it's going up for no good reason. We've got all these macro events that should be making the market go down. I was going to ask you a question about your gold analysis. So from what I picked up is that you seem to be very technically based a trader and what I mean by that is, like, for instance, Saudi Arabia or OPEC has said we're going to increase supply through the summer months. And we also know that Trump has been trying to push American producers to produce, drill baby drill, right? And so it looks like Saudi Arabia is being preemptive and saying, hey, we're going to raise supply so prices go down so we can hurt those American producers who have a higher cost structure. And to me, that's the macro view. But yet you're going long, and I understand you're going long because of the increased risk of Iran-Israel. But it's going against.
Not necessarily too much. I mean, I'm not really planning on holding it for like a swing trade either. It's like, I'll monitor that thing, and if it's not going my way, I'm going to pull it.
Yeah.
So what you've been seeing today is, like, also trade the NASDAQ and the ES. So using a bit more like, how can you say, money maker model type of things, different sessions, AM sessions, looking for liquidity sweeps or breaks. Signs of reversal, but generally in a trade, I'm out of the trade 5-10 minutes. Now, that's not your scalping. I don't know how long you're in a trade. You're probably in there for a few seconds at some stages. But I'm not too fussed about what's happening in the macro view too much. And that's definitely not it's a plus point if, with this war and stuff now and them attacking the oil fields, that you could get that intraday push and that momentum could be on your side. But in the bigger scheme of things, obviously, I do care that we don't pay too much at the pump. But, I'm willing to go long or short, depending on what I see on the chart. But you're right. I mean, like, bigger scheme of things, I do think what you're saying. Also, the bullish scenario that I explained on the higher time frames on crude oil, it might just be, again, in the back of my mind, some sort of a deeper correction upwards with a continuation lower at some stage. So, I mean, it's a lot of play. It's like, a crude oil, just like the NASDAQ, when it gets a day where it wants to run, it can run big time.
I have a hard time with crude because my macro view skews my technical view. And I think that's the big... For me, that's my challenge. My challenge is to not let the macro view overstep my short-term technical view. Gotcha. Because what happens if I'm just saying from oil perspective, what happens if Iraq suddenly stop and they sign a peace agreement? Oil's gonna drop. Same thing with Russia. What happens if Russia stops? All of a sudden, Russia is hurting so bad. They are going to pump so much oil.
These days, you can get the news over a tweet, right? Or they could just be in a call right now. You don't know that, and boom, it goes the opposite direction.
So nervous on the long side for oil. And of course, I would be going, okay, it's coming up. Where is going to turn over? And I'm looking for that turnover point to be on the short side, which in the short run is going against the trend, right? The trend is up. And so, I mean, that's my struggle. And listening to you, I'm like, my whole brain's going, but wait a minute, right? But you're totally right when you look at the technicals on a short-term basis. And I think that's a struggle. I don't know if you struggle with that. I struggle with.
I struggle to do swing trading like Igor and some of the other coaches, for example. I just, once I start seeing a nice strong move, I want to really be out of it. I want price to hit my targets, and I want to sleep at night. I will trade options longer term. That's not a problem. But at least there I've got some more control, especially if I buy or sell options or do combos longer time frame out, where you can actually, if things don't go your way, try to sort of rescue the position. So I find, for me personally, option the vehicle to trade that longer term is I prefer that. We're in a shorter term, like this trade now, it's going in my favor, but I'm not going to hold it, because a year afterwards, I have to shoot home. It's nearly 5 o'clock, 4:45 p.m. here in South Africa. Then step away from the PC. I don't want to actually monitor it on the phone. I also got my work desk or trading PC solely for trading at an office away from work, so I don't work from home. So I need to that disconnect where I go to the office. I do obviously this with you guys, which is awesome. Involved in more like the teaching side, the education side of things. But when it comes to trading, I think when I go home, I don't want to be worrying about a position. And I've been burned many times, like trading, and something happens, and all of a sudden you sit with a gap against you. Something like we just talked about, a tweet comes out, or there's some peacemaking deal. And in this day and age, it happens just like that. You know what I mean? And out of the blue, and you're sitting on the wrong side of a trade, and you lost more than you were looking to lose in the first place, or risk in the first place. But then again, I mean, Igor, you guys, when you do take swing trades, you don't go with the heck of a big lot size either. Am I right in saying that?
Yes. I reduce position size a lot. So there is one trade that I repeat very often, and this is why I repeat this sentence very often, related to the stock traders, because stock traders, they see very often highest highs, and they can make a swing trade sometimes and find a V shape, because when you have a fresh high, you can try that. In Forex market, there's always is some kind of a range, and that range is so frustrating. And the only thing is, if you have a bullish scenario, to catch the low, or if you have a bearish scenario, to catch the high, and that can be very good strategy. And but you need to have a bias. For example, right now I just talk about British pound dollar. In the moment when I start to talk about that, we had price 1.357. It was the high, and that now we have 70 pips down there. It was a beautiful trade, but I didn't have the bearish bias clear, and I didn't enter into the trade. So the problem is to have the good bias, and this is the problem every single time when I have a losing trade.
Gotcha.
Yeah, I find out that some of my students, because they do not have a market background or a macroeconomic background, that they do better because they're just not paying any attention to, they're following what they see on the chart exclusively, and they don't worry about those unforeseen things. They just trade what they see in front of them. That's become one of my mantras: is trade what you see, not what you think, right? But unfortunately for me, I have a master's in, I got 30 years ago, but it was in economics. And so I just love that those macro movements and ideas, and it really skews your short-term trading. And that's something you have to be very careful about.
It's also very difficult to unlearn bad habits. If you've been trading for so long, it's extremely difficult. So I mean, it's the challenge is ongoing. It's like I was telling what was it, Jannie, the other day. It's like, I know a few guys that, like engineers, that they just struggle to trade, because when they're wrong about things, they want to know exactly why. The markets don't behave like that. You can't overanalyze things. It's like you said, it's probably easier for a child to just show them a chart. Is the market going up or down? Where should I buy or sell? Basic techniques, and in many cases try to keep it as simple as possible, I think.
I 100% agree.
You're right.
This
James,
workstation.
are we doing on time here now? I think we've reached the end of the session. Let me just have a look.
Yes.
Yeah, we're pretty
1
much
minute.
there. So,
It's great meeting
any
you
closing
guys.
thoughts? Robert, Robert's giving you some compliments there, Troy. It's good to hear Troy's
Yes.
thoughts on economics and trading correlation. He needed that. So, perfect. Well done. Thanks for that, Troy.
Thank you,
So
Robert.
Robert, hope you enjoy the rest of your day.
something.
He's only off to work at this time. Sorry, Igor, I'm talking over you.
Just to add something, just to say thank you to Troy, because you really give us some kind of the theoretical background with the practical problems in the US. And thank you a lot for that, because we don't live in US, and sometimes we need to get the clear picture how the situation is complicated. So thank you for your thoughts and everything.
And well handled without siding.
I mean, yes, you have to be that way. You have to look at the market as objectively as possible. And
100%.
Right, we call a spade. So it is what it is. And I love hearing your guys' opinion of the US. I was teasing Jannie and Paul because they had a very distinct opinion about the US, and I thought it was very amusing. So it's back at you.
Well, the US amuses us quite a lot here in South Africa too. Don't you worry. But in any case, Troy, Igor, fellas, thank you so much. I hope to see you soon again. I think the markets we're not doing a session on Thursday, but I'll be back on tomorrow morning again. To all our viewers, thanks for the questions. Thanks for watching. Please stay tuned for the next round of coaches. And I'll see you tomorrow in the morning session again. Thanks, guys. Take care that side.
Thanks. Good to meet you.
Awesome.
Bye-bye.
Cheers. Bye-bye.
Hello, Michael and Paul. How's it going, guys?
Hi, Michael. How's it going?
Hey, what's up? What's up?
Yeah, good, man. Good. I mean,
I'm great. What about you guys?
Cold, but good. Paul, you've pulled the curtains today. Is that because of the long weeds in your backyard? Are you trying to hide something?
I got a quick one.
No.
I got a quick trade. I was waiting for this to.
Okay, Michael wants to place a trade. Great. I'm just waiting for you to share your actual.
I got a quick one. Is my screen showing?
Not yet, mate.
No, I can see you've shared something, but it's not your charts.
I guess I need to allow the sharing because I'm saying I'm sharing, but it's not showing.
Yeah,
on the screen yet.
but that's what's showing.
Oh, there we go. Okay, cool.
That's what I meant. Okay, great.
Okay, sweet. All right, so we're good to go now. So yeah, I actually been waiting on this since this morning. I will admit, perfect trade is super close, but not perfect. And reason being is not perfect is I don't have my 4-hour confirmation just yet, which to me is a pretty much I can't put my full position on this since it's not confirmed on the 4-hour. I would have wanted for price this last candle to be below the 13. If you can see, it's not. It's slightly above it. So I'm not going to put my full position on here. I'm actually only going to put half of it on. But I am going to take this because this is actually a great setup. It's not missing anything else. So I'm only putting on half of this, as you guys can see. And we should be getting in here any second. No, there we go.
Order place.
Right, so my field price is at 45. Right. Cool. So this is at 45. If this comes up here and touches, let's say this 50 EMA, I will be tempted to put on like another quarter. So I'll just put up an alert here, second entry. And this one might be good to go. I took this actually on Friday for the 4-hour move, right? Because you guys always, like part of my process is to take level 1 and level 2, right? So we had this 5200 cross back here, right? And then we had this nice structure here, M off the 200. Once this closed below this structure, I shorted this. I was literally in this huge move going short. Now the next move is for it to pull back, touch the 50 and drop again. So I want to catch that next move off of this just on a smaller time frame, which would be the 1-hour chart. So great setup. The only thing is literally missing is that 4-hour confirmation. That's the only reason I'm not putting my full position on it right now. If it would have, I would have been all over this bad boy, to say the least.
Okay.
But yeah, it has everything else. We got the beautiful outside the band, inside the band. We got the reload. This is nearly a perfect trade, except that one thing, guys. So just wanted to jump into it and show that really quick. I was waiting on this all day, so.
Very good. Okay.
I'm gonna grab that live for you guys.
Yeah, thanks for that, Mike. Cool. He called you Mike without your permission. I'll never do that.
Yes.
I've done that before, so I apologize.
Everyone calls me Mike, actually. Everyone
really?
calls me Mike anyway. You can definitely call me Mike.
Okay, awesome. All right. Well, I think we had some news events today, if I'm not mistaken. Quite a few. We had core retail sales. There's a couple of news events on the JPY, Bank of Japan policy rate, monetary policy statements, and all the rest of it. And tomorrow we have CPI on the pound and also unemployment claims on the dollar. So a pretty busy week. And then Thursday, again, some high impact news events on the pound, monetary policy summary, MPC official bank MPC official bank rate votes. Well, whatever.
Right.
All right. Well, I'm going to share my screen. Let's start. I'm going to start with gold. That's a trade I took yesterday in the session. So let's have a look at gold. And gold, yes, gold stopped me out. Yeah, it did. I took the trade.
Gold stopped me out last week, Jannie.
Oh, really? Yeah, it just wicked me out.
Yeah.
Not just wicked me out, like it went much lower than where I entered the trade. And on the 4-hour time frame, you can see we're struggling at that support level. But for me, this is not on anymore. It's going to have to break up and then just give it a clean retest. But yeah, so gold is not is on ice for now. I don't really. I still feel I'm a little bit more bullish than bearish, unless this just breaks down, and then I'll probably have to reassess everything and leave that alone for some time. But yeah, that trade didn't work, and that's just been the story for June for me, to be honest, Michael. You know, my setups just didn't play out. I mean, it's not that bad. It's not like I place like a trade every day or anything like that. But yeah, the last couple of trades, the 4 actually,
Right.
just didn't work.
It hasn't been easy trading for sure.
Yeah, they just haven't. So really, what I do, but the thing, what I did with the gold trade, and this is probably a very good lesson as well for people watching, is like when you do find that some of your very best setups just don't work out, there's 1 or 2 things you can do. The one thing is something I actually suggested yesterday, and that is just take a break, right? Just stay away from the markets for a week even. You don't worry about, you're not going to miss anything, I promise you. You need to let go of that mindset of, oh, you have to watch the markets every day, otherwise you're going to miss out on an opportunity. No, just relax, okay? Just take a week off. You won't miss anything. The second,
you might miss something, but I think the point is there's always another trade down.
Yes.
Yeah.
That's the point. You're right. That's absolutely right. That's the first thing. The second thing, which is what I've done with this gold trade as well, is you reduce your trade size. Okay, half your trade size, even less. I mean, on this last trade, I only lost $350. So it's not really, it's not not a full percent or more. It was a very small loss. So those are your 2 options when you find that, hey, these setups, I know they're very good, and maybe you're just going through. Maybe the market is just. I don't like to blame the markets, but you do go through those patches when it is a bit rough and the setups just don't work out. So stay away. That would be my number 1 recommendation, because that's typically what I do. Right before these live streams, I would just stay away. Right, no trading. Give it a bit of a break.
What people need to understand is that, like a break, right? It's how you regain control.
Yeah,
right. That's it. I mean, you just level up as a trader. If you can take a break and you can be disciplined not to trade, then you're going to be more disciplined while you're trading. It's that very paradoxical approach to life.
Yeah, very true. Yes.
Right.
But if you are going to continue, just and you do go through like a patch. Look, I mean, I had a very good year so far. This is the first losing month. So far, and this, we've got another half of the month left, but it's not catastrophic or oh my god, it's terrible. It's just some really good setups just didn't work out. So it's nothing out of the ordinary. That's what I'm trying to say. But again, it is always a good idea to just take a bit of a break, or if you continue, trade much smaller, trade half your size or even less, and then you can always just start to go back to your normal trading position. Once you've seen that, okay, we now trading very strongly again, and the trades start to come in again in your favor. Okay, so gold I'm just going to leave alone for now. I'm still bullish, but again, what I would like to see is just a move back up, and then just a clean touch again. That would be great. And the other one is pound US dollar, though, the pound US dollar we spoke about yesterday, that even though we are bullish on the pound US dollar, it's not a good place to go long. Definitely not a good place to go long, because you at that resistance level, and today we did move much lower. Okay, yesterday 17, well, today's the 17th, so yeah, yesterday in yesterday's session we were like right at that resistance level. I'm pretty sure this bullish candle was still busy forming, so it looked like it wanted to break out in the session. What we spoke about is just not a good idea. Okay, you right at that resistance level, you want to see like a clean breakout and maybe a retest, but you know, a resistance levels in an uptrend is just the worst place to trade. It just is, right? And now we've pulled back. Now, if you look at just this chart, you can't really see where a potential support is, but I did mention before that this is your anchor. Okay, this is the retest of the weekly breakout, and then you make this higher low right there, and that's like the bodyguard protecting the queen. I think that was the reference I used, right? So that needs to hold. But if I have another pound US dollar chart here over here, if I draw this diagonal line here, you can see like if you identified that as a higher low, then it would be interesting to see how it behaves at this level over here, like this touch here. Maybe that will be the low, and then it continues back to the upside, right? But for me personally, I'm not really interested in the pound US dollar either. I find the price action just very messy. It's not great at the moment. But still, I'm still bullish. Nothing has changed on the longer time frames. You know, all those positions, and you know that cup and handle formation that we have identified on the daily time frame. All of that is still in play. It's just like when you go to smaller time frames and you try to look for an entry, that's when it starts to get a bit tricky, because the setup needs to make sense, and you need to be able to explain to someone why exactly you took the trade, right? And where is the trade being invalidated? In other words, where's your stop loss, and why do you feel that's the point where the trade has been invalidated? If you can't do that, you're gambling. Okay, you need 100%. To be able to. Yeah. So
100%.
But even now, the tricky bit is like, you know, this initial entry. If I was still in this trade and I didn't move my stop loss to break even, of course, I still would have been in this trade. But I mean, because it's not doing much, there's like a bit of a what's the right word? Is it opportunity cost? Is that the right word? The fact that you've been in the trade for some time and it's just not doing anything. And because you're using leverage, you're paying interest on the position, which is also known as the swap. So you are paying to be in that position every day. And on a Wednesday, you'd pay 3 times the swap.
What?
Huh? Did you not know that?
No, I didn't.
Yeah, on Wednesdays you pay 3 times the swap. It's triple. So good business to be in if you provide leverage to your traders, that's for sure. So the swap definitely would have been a bit of a concern, especially if you just keep ranging and you're not breaking out, and eventually it comes to stop you out, and then you'll lose your stop loss plus all the interest you paid on the leverage or the swap.
Yeah. That's exactly why I don't like to swing trade, because of that right there.
Yeah, I suppose it depends on. Yeah, you see, it can be a bit of a hit and miss, right? Swing trading. It can. I mean, isn't that true with any type of trading, any trading style?
Now,
but if
later
it
on, I'll show silver, because after the gold trade happened, the next play was silver, which did decent. It was a move that happened. We didn't jump into it, but man, that thing chopped for days. I can only imagine thinking that move's going to go short. You jump in, and next thing you know, it just sits there. They held the level for like 3 days, just ugly. And they finally broke out of the range today. So after you stood there that whole time in a position short, paid all that swap, it stopped you out today.
Yeah, that's the kind of every sport has its injuries. That's just how it goes. Yeah. but anyway, but I still think like if you're in this position, regardless of all the swaps and so on, it's a very good spot, and the probability is still in your favor. I do think this still has the opportunity to break out high. I'm just not sure when. Nobody does. Okay, maybe one of the news events will go, that's the one we've been waiting for, and then it just breaks out to the upside. But it certainly doesn't look ready to break out today. Not today. Not going to happen today. Okay, but I would definitely pay. But this is the most interesting level of interest for me, is this diagonal line here. That's the only thing that makes sense to me on this chart. Okay, for a potential entry. All right, so that's the pound US dollar. Bias still very bullish. It just struggles at that resistance level. And then the NASDAQ. Man, oh man, the NASDAQ is struggling. I had this diagonal line over here that I removed because I don't feel it's relevant anymore. Because while we had this ascending triangle, obviously that was valid, but we had it looked like it wanted to break out, and I wasn't interested because you've got the all-time highs right above it. So breakout resistance, not a good idea. And also, again, as I've mentioned, on the pound US dollar, like if you're in an uptrend and you're at a resistance level, it just gets messy. It's just messy. It doesn't want to know what to do, and it's just very, very rangy and choppy. So it's been going to the side with the occasional little dip. It hasn't really made any progress. In fact, I think we exactly where we were yesterday, actually slightly lower than where we were yesterday in the session. So I'm still waiting for the same thing I've been waiting for a couple of weeks now, maybe 3 weeks, I don't know. But it needs to either just break down, or it needs to break completely out of this this all-time high and then a clean retest. That's the only time I'll be interested. But for now, it's very tricky price action. What's your take on that, guys? Let me just delete that.
Like you said, it's just there's quite a lot of price action at the moment.
What's up, Robert?
Of the conditions we're dealing with.
Robert, I always do session 2 on Tuesdays.
Oh, Robert's here.
Hey, Robert. Nice to see you, man.
Yeah.
Yeah, Michael got kicked out. Yeah, he got kicked out of the closing session because he was going to trade US30. The rules are strict in the third session. They don't mess about there. That's for sure. Yeah. Yeah, anyway, it's not, I have a very difficult time identifying a potential level for a trade here, just based on the fact that we've got the all-time highs right above us. That alone makes it very risky. That, okay? It's very similar to, let me go over to Bitcoin, when we looked like we were going to make that push for the all-time highs again, and then we just fell short, and we had that divergence in price. We came down to that support level. That's where I took a trade. That was a very good setup, in my opinion, and failed. And then it found support at the 61.8. That trade I didn't take because you got the resistance right above there. And we did break through that resistance, but it just fell short. And now we're all the way back down to the 61.8. So I do think this is going to go lower. Okay. I think the probability for this to go lower is higher compared to the probability for this to go up right now. So yeah, I think the 98 level could be in play now. Maybe not straight to the 98 level. Maybe we will come back up for a third touch there. I don't know, but where we are right now, it definitely looks more bearish than bullish. That's for sure. But what I'm trying to say here is, like, when you look at the price action here, it looked like it wanted to push for the all-time highs, and then it just didn't make it. And I've been saying this for a long time now. We could, even though it doesn't quite look like it over here, because it's so close to the all-time highs. You could get something similar, right? You could just fall short, and then it goes much lower. So it's a very dangerous place or position where we are right now to place any trades here on the NASDAQ, in my not so humble opinion. Very arrogant in my positions. I take. No, but it's not a good spot. It's just not a good spot. So yeah, but Bitcoin,
I agree.
yeah, like when you get that such a strong bounce of the 61.8 and you kind of come all the way back to it, the 61.8 is not. It's like there's no more the foundation, or what's the word? It's just weak. It's weakened now. It's weakened. It's not as strong as the first time it bounced up there. So yeah, we could see this. What we thought could be a higher low that could be taken out, but only time will tell. I mean, the main point is, I think on Bitcoin, if you trade Bitcoin and not the altcoins, like well, maybe even the altcoin, Paul will obviously go into a lot more detail when we get to that. But if you trade Bitcoin, this is not a time to be interested in Bitcoin. Not for a long or a short. Where are you going to take a short? Right, where are you going to take a short? Where are you going to take a long? If you want to go long, you may start to pay attention at the 98 level. Okay, that would be the soonest, I feel, where Bitcoin might look attractive for a position to go long. And then, do you target the all-time highs? No, I will play that very similarly to how I played gold when we were coming off the daily support level, and I was just aiming. Well, I didn't even aim for a third touch. I just wanted that gap to be filled, but I was looking for a short at the third touch. Okay, so Bitcoin could have a very similar play there. Okay, maybe come all the way down to the support level and then go up for a third touch, and then maybe reject from there, and it's going to be all messy for a while. I don't know. Yeah, so, but no trades, not interested in Bitcoin, not interested in the NASDAQ. Gold will have to kind of just push back up here, and then maybe if I can get a clean retest there, or just a clean touch, then maybe then. And then the pound US dollar, as I've mentioned, we'll see how it behaves here. If we can see some price action, maybe some patterns, if it trades up there, then that could potentially be an entry. Okay. So yeah, that's it from me for now. And over to the great Michael, aka Mike.
Before you jump off, Jannie.
Yeah. I'm still here. I haven't jumped off.
Before you jump off, I want to see your markup for silver. If you got an idea on silver.
Silver. How does this MT5 platform work again? I'm an MT4 guy. Okay, please bear with me here. Where is that thing? Market watch. Okay, I don't trade silver. What's the ticker?
That's a good question. It is XAU. Let me see. It's XAU USD. No, I'm sorry, XAG USD.
I'm like, I was gonna say like, oh, XAU is gold. I'm just carrying on. XAG.
Okay, XAG USD. Yeah.
Okay. Okay, so let's go new chart. Oh wow, that looks very different to gold, doesn't it?
Well, it's got a slightly, it's not as orange. It's not as orange as gold, silver. It's like a grey color.
What grey color? Sorry, what are you talking? What are you talking
You were
about?
saying how gold is different to silver.
Sorry, it's just like, oh my god. Okay, sorry about that.
One's a little bit heavier, I think, as well.
I can't. Yeah, very true. Okay, but yeah, silver looks very different, right? What's my take on it? It's breaking out.
Yeah, I want to know your take on this.
Yeah, I mean, obviously, I
hardly ever trade silver, but I do.
I don't. This is probably the first time.
Like right behind gold.
This is the first time I've looked at the silver chart since Igor showed his 100-year plan. And before, he does have a 100-year plan. Not joking.
He does. He's very committed to it.
Very committed to it.
If you're aging, then he's going to nail it.
He did say he's going to pass it on to his daughter as well.
Hey,
if it doesn't play out in his lifetime.
Multi-generational trade. Sounds good.
Yeah. But anyway, before that, like silver is not something I look at all. I don't look at silver at all. Okay, but anyway, just based on first glance, we're obviously in a very clear uptrend. I'm just trying to see if there was some sort of where did this pull back to? Is there like any obvious level that you can see? Not really. Maybe if you zoom back further, no. Well, all I can see now is breaking out. So if I had to trade this, and you said, and you, Michael, you threatened me with, all your gangster buddies, you're going to take me out if I don't place a trade. I'll probably wait for this to make a nice arc. To make a nice arc. I don't like to trade breakouts out of the resistance areas. I just don't. It's going to have to come and retest it somehow. That's when I'll be interested. But what's your take on silver? Do you think it's going to go much higher, or because that's an all-time high, right?
Well, price discovery does obviously.
Yeah, this thing has just went.
Yeah. Okay. Well, unfortunately, on this platform, I'm very limited in terms of data. I can't zoom back very far. But yeah, I mean, to answer your question, it looks very bullish, and it's breaking out. Depending on how you trade, for me personally, I won't trade this until maybe if I can get a retest, I'll definitely be interested. Yeah. Are you in the trade?
Nah.
No. Stock trader. Nice to see you. I don't think I've seen you before. AG is the chemical symbol for silver on the periodic table of elements, and its ISO currency symbol is XAG. Okay, that's very interesting. Thank you for that, stock trader. All right, that is it from. That's now really it. That's really it from me for now. Over to you, Michael, please.
All right. Sweet. Cool. Let me see what we got. So yeah, it was actually a decent amount of setups for me today. Like they didn't all plan out, but it was a lot of them that were really, really close. I want to start with my gold trade from last week that I got stopped out on. I took this live and it did not work out. This thing just it was very interesting to me, to say the least. So my same structure as always. This was a bit funky, but this pretty much the same model. Oops. Okay. All right. So we had this structure here. This went down 1350 cross. This was not a move. Like this short, this is not a move. But I did take this trade short right here.
Is that because it's already been literally 200?
Damn. Yep. When I don't take the level 1 trades when it touches the 200 already. I don't like to take those. It has to miss it. Right? So the next move was here when it's 5200 crossed. Now I'm looking for that level 2 move going short. Right? And I was trying to take this move right here towards this 200. And when I tell y'all this stopped me out in like 20 minutes, I was so surprised. I think this is probably the fastest I got stopped out all 2025. Seriously, this thing took me out immediately. So this kind of threw me off. But yeah, it was still a good setup. Like even when I did the homework on it, I looked everything about it. Like this was still really nice. Like it was a nice structure here. You know, short. Like typically this works out perfectly fine. But in this case, it didn't. And I really thought that I had it when this candle closed below this structure, right? When it closed below all of this, from here to here, I definitely thought it was good. I almost added another position right here. I was almost too committed to this play. Luckily, I didn't. I was already fully on when it got here, and I just let it go. And sure enough, it stopped me out. Like it stopped me out quick, y'all. I mean, really quick. So yeah, that was they punched me in the mouth on this one for sure. And as you can see, it's been long ever since. So this is one of my trades that did not go nowhere near where I thought it was going to go. Like I was wrong and wrong fast with this one. So that was one move that I took last week. The next one was this silver trade. I didn't take this because this set up at 1 o'clock in the morning. So I couldn't take it. Right. So same as always, we got this nice M structure. We're expecting this run, not touch the 200, right? Come back and drop. And that's exactly what it did. If you can see, zooming in, this candle right here that closed right below this 13, and literally in one candle, it went all the way to take profit in one candle. But as you see, this happened at 2 o'clock in the morning. I was definitely not up during that time. So unfortunately, I did miss this trade. Like it went down quick. But the funny part is after this, which is why I asked you to look at silver, right? Once this move happened, and this is why I always say, once you take the first move and price touches the 200, you can't take this again. Your next move is for the 50 and the 200 to cross, and you take the M or the W off the 200. You can't take this bounce move more than once, right? So what happened is you see somebody might have tried to take this 1 time, 2 times, 3 times, 4 times, 5 times, and it's just been chopping ever since, right? Literally since the 12th to the 17th. So almost a week, this thing has just been in the same exact spot. So this is what I mean when I say just sticking to the rules. For one, don't try to keep taking the same setup over and over again. That's not how it works. The next move, once you missed this 1350 cross here for the level, for the level 1 move, the next move would have been to have this 50 and this 200 cross for the level 2 move. You can't keep taking this. You're going to get jammed up. This is a perfect example of why I don't take this. I don't take the second move. It doesn't happen this bad because this is chopping really bad, but a lot of the times it just won't work. So I stay away from these. So yeah, cool. That was those two. Want to just touch on those. You mentioned GU. I really wasn't feeling GU for the simple fact that this trade yesterday was okay. I was looking at it yesterday because we have the 5200 cross, right? The next move that you would expect is this W off the 200, which it kind of did give. First leg, second leg, close above. This wasn't bad at all, like a bad move to take. The only thing that was wrong with this is when I take this trade here, my market baseline should not be above the static line like this. It needs to be below that reload that I always talk about. It should have looked more like this. And this little baby, let's say, this little bitty piece right here does not count. This is way too little. It needs to be much fuller than that. So I'm not interested in GU for the longs at all. I'm more or less looking for shorts on GU, which will look something like this. You see the 50 and the 200 are already pretty close. So I want to see something like this. Right, then I'll get this 5,200 cross from here. And then I'll be interested in seeing price give me that M off the 200 and then short towards the 800. I'll take this move short, but I'm not taking any longs until it does this. Right. And simultaneously, the market baseline needs to go below the static and back above and create that reload that I always talk about. For me on this particular setup, if there's no reload, there's no trade. So it needs to do this, right? This will be a nice, nearly, obviously we can't tell exactly how to close, but the R to R on this will be pretty decent if this does set up. So this is my take on GU. I'm not looking for longs at all. I want this to go short. I'll take the short move on GU. On GJ, I think GJ was so out of whack. Yeah. So this move tried to mimic the same move as AJ did, which I'll get into in a second, because I did take AJ on Friday. But what I don't like about this is it's already really high, right? And then we get this 5,200 cross all the way back here. I'm looking for the next move should be the W structure. But instead, what do? This cross to the downside. This cross to the upside. There's a lot going on right here. Right? We got all of these crosses. This is way too much. These extra 3 here, not good. I don't like it when it looks like that. That makes this move, this inadvertent head and shoulders pattern, look unpredictable. You kind of can't spot this good. I want it to be this one right here. I want it to be the very first one to take this. Kind of like AJ. If we look at AJ, this one did it. This one was perfect. Right? This is the first cross. Right? This little move here doesn't count as the touch, because if you look down, you can see that the yellow market baseline is still above the static. So this is not the move. The move happens when the yellow market baseline goes below the static, which the first time it did that is right here. That's what makes this move work. Left head, left shoulder, head, right shoulder, close above this area. You were good to go right here. Right. I actually took this yesterday. I didn't take for the full position to take 2 Asian pairs like AJ outside of Asia session. And if I do, I only put a half on it. So when I took this trade yesterday, it was only a 0.5%. And then I closed it at 355, which I was not even towards TP. So I only took a quarter off this full move yesterday. So nothing really. But part of my rules is I can't not take it because this is my exact setup. So just notice the difference between how this 5,200 crosses one time here and then makes the move. But on GJ, it crossed about 10 times and then tried to make the move. Way too much. Like, it's too much going on with this. The first move is the solid one, and that's it. And this really didn't give us like a nice shoulder to go back to anyway. So I'll let this one alone. I didn't like GJ yesterday. My move was on AJ. Outside of that, we did have a few other ones. I was really, really looking forward to EuroCAD setting up today. Super, super close to this, guys. I mean, I got the alert set and everything. I was really ready to take this trade, right? W off the 200, right? We have this 5,200 cross. Once again, the next move is the W. This is nice because it gave you 2 legs here, ran up, 2 legs here, closed, and then it stopped you out if you tried to take it. The reason you couldn't take this trade, once again, the 4-hour confirmation is such important, because if you look at this, you can see that on this green candle, price is below this red 13 EMA. And that's why this didn't work out. Now this I got this alert set. This may work out in London. If it does, I won't be up for it. It may work out in Asia. If it works out in Asia, I'll take it, but I won't put my full position on. I'll only put half of it on because I don't want to take two pairs that has nothing to do with Asia in Asia. So this one was super close to setting up. I mean, ridiculously close. It had everything it needed except that one key element, which again is the 4-hour close. Right, we had the market baseline go below the static for the reload. Everything about this except that was kind of off. All right, so I'll put this back. And this might not even work out later now because now we got this huge wick. Price needs to go below this 800. We can target these highs. Okay, still 1.5. That's not bad. So we'll see what this works out to be. So I was waiting pretty much for this one to set up, and it never did. What else we got? We had a few of them going the other way, guys. So we had a lot of them. I got a lot of alerts set because a lot of these are really close to setting up. They might happen in London or Asia. And these all look the same. They're all my number 4 setups, which is the W or M off the 200. We got the 5200 cross. We got the first leg, second leg. All you need is to close below this. You can take this. This is almost 1 for 2.5. Right? We got this beautiful outside the band here. Inside the band for the second one. Super, super nice. Cash Swiss, I told everybody might be in play for today. It's like 4 more like this too. FJ isn't one of them. Cat EN isn't one of them. EF isn't one of them. AF is one of them. Look how close this is. This is super close to setting up. Same exact play. 5200 cross. The very next thing you're looking for is the M off the 200. You got the outside the band, inside the band. Market baseline is above the static for the reload. All you missing is this close. All right. All of these are the same exact play. And this typically doesn't happen so many in one day. Some of them going to confirm, some of them aren't. Some of them are. The R is going to be worse off. Some of them going to be great. So in these scenarios, I always try my best to, like, what do you call it? Cherry pick. Yeah, cherry pick which ones are the best ones. But this one is super close as well. So super nice. What else we got? NF. Now this one's okay. It's not perfect. And I say that because of this back here. This is kind of what I don't like. They kind of started to go up and kind of went down. So even if this does happen, I'll probably take this one for a half, if anything, instead of the full thing. Or I might not take this one at all, and I'll take the other one that's close, which was AF, so AUDCHF. But once again, same exact thing. 5200 cross, right? First leg, outside the band. Second leg, all you're missing is the close below here. This one is giving you 2.5. All right? Market baseline is above the static for the reload. Same exact thing as the other 3. And then we got NCAD. Same exact thing as well, right? NCAD looks just like AUDCAD. So we got AUDCAD and NZDCAD looking alike. And then we have AUDCHF and NZDCHF looking alike. So plus those 4 plus CAD Swiss is like 5 potentials, right? The same thing once again here. 5200 cross. First leg. You see this is outside the band on the TDI. Next one is inside the band. Market baseline is above the static. All of these are really, really, really nice, guys. Once again, the only thing that's missing, which is the same thing that's missing on the rest of them, is, oh, this is another reason why I didn't like this one too. This 800 EMA is sitting right in the way of this. So technically, I want this to close below this 800 EMA to even take this. But as you can see, once again, this has no 4-hour confirmation. Price is above the 13 EMA. So this is why none of these are technically ready yet. Right? But all super, super close to all setting up. Again, these may set up in Asia. All the NZD pairs. So NZD CAD, NZD CHF, AUD CHF. All of those, I told everybody be ready for them. Set your alerts for Asia session. Don't take them all with full percent. You know, put some quarters on, put some halves on, just in case. But yeah, all of them are very, very close to possibly setting up. We're looking at an AUD CAD. I like AUD CAD the most of all of these. Mainly because I already, as I mentioned, I took AUD CAD last week. Right on this candle. Right, so the next move in the cycle, move off 5,200 cross, you got the M off the 200. Once this runs and the 1350 cross back again, the next move is going to be the bounce move off the 50 to drop. So I like AUD CAD the most for the simple fact that I took it last week, and I know for a fact that this is the next move in the cycle. I'm really just, what do you call it? The other ones are correlating to this right here. But at the top of the list is AUD CAD. Yeah, that is pretty much it, I think. Let me see if we have some other ones on here. US nothing. UF was nothing. UCAD was nothing. GF, nope, that was nothing either. GN, nothing. GC, nothing. Yeah, none of these were good. Yeah, we went through all of these. The only thing I did see that was kind of close, and you mentioned this too, Jannie, was NAS 100. This is kind of questionable, to be totally honest. The only reason I don't like this is you see I got the alert for the all-time high as well. I got this set. I don't like taking trades this high. Like this is already, this thing is already ridiculously high. So I don't really like to take on what I would call level 3 trades even higher. Now we do have this beautiful M structure. When the neck is the bounce off the 50, as I said. All right. Move once the 5,200 cross, you want to move off the 200. After that, you want to bounce off the 50. So technically, this is like right. Again, I just don't like how high it is. I don't want to be trying to take this into all-time highs. It's like buying Bitcoin at 110,000 or something. This doesn't make sense to me. So I will leave this alone. But theoretically, the move is actually there. Even if you measured this up, it will look something like this. So I'm not going to take this, but you could be in this move. We even have the market baseline, as you can see, has crossed above the static and everything. So super close to actually being right. Again, I just don't like how high this is.
Story of my life.
So this will be a pass for me. Yeah, this is interesting. I know a lot of people are short Euro AUD, which this is like competition going on. I see everybody took this trade today. To me, this is not short. This is long, right? And reason being is 5,200 cross to the upside. The move here is the W. All right, we're looking for a W structure off the 200. Market baseline is already below the static, so we got the reload. But this is long. So if you're in AUD short, I'm sorry, but to me this is long. I got asked about this trade like 10 times today. Can't target the ADR high because it's a little short. I will be targeting this price here, which is around 78.20, somewhere around there. So for me, this is long. I know a lot of people are short EA right now. I let this one alone. But yeah, that is pretty much it for me. Did you guys want me to point anything out or had any questions about anything I just went over?
No, it was pretty clear, I think.
Yeah, really good.
How
Thanks,
about you?
Mike.
Yeah, thanks, Mike. Mike.
Nice.
I'm gonna get Mike. All right. Okay,
Nice,
sorry, let me just take that off.
It's nice to see this suddenly.
Yeah, it'd be interesting to get your take, Paul, on not just Bitcoin, obviously, because you don't trade Bitcoin, but you do focus heavily on the altcoin market. So that's going to be interesting, especially with what's been going on the last 2 days. Well, maybe more so today. Bitcoin looked pretty well. I mean, it made that correction, but that was always going to be a temporary correction, but just based on the structure of the market and so on. So anyway, over to the master Paul, please, if you don't mind.
Thank you. Let's have a look. It's mainly altcoins today. Oh, hello. All right. So Bitcoin 2 hour. Can you see this okay?
Yep.
Right. So obviously, when we're dealing with a lot of this sort of all over the place price action, designated with this 4 hour 200 MA tussle, the only thing we can really look at is the range we're trading in and basic trend dynamics, which is, are we maintaining an uptrend? Is there a sign that we're going to lose an uptrend? So up until this point, we had a higher high, we had a higher low, and now we have put in a lower high, but still maintaining a higher low, although we haven't had a bounce. So, and then we're obviously regaining and losing the 4 hour and 200 MA, which makes it, as we've already established, very difficult to trade. So are we going to have a move downwards? Well, potentially, but the general rule is that whatever range you're trading in, just look for the bottom and look for the top, and then those are ultimately what you want to be. Those are the areas you want to be shorting or longing, essentially. And obviously, if you put the fixed range volume profile on, then you've got something to trade in the middle, if I can find that amongst my crazy amount of indicators. So, and then we've got. Well, let's go. Here we go. And then, as you can see, it looks like we're putting in a touch of the point of control now. So really difficult to discern what we're doing, if we're honest, and we can spend our time looking at the RSI and trying to figure out what's going on. But ultimately, we're not going to get pretty decent signals. We just need to focus on what's the next higher high. Are we going to have a low low? Are we going to surpass this? And just wait and see, because at the moment with the world events, any given moment, markets could be shocked. And even though Bitcoin might quite comfortably brush off any news events, what we do see is Bitcoin just in a holding pattern, just waiting to see what happens next. And obviously that's traders which are doing that. What is going to happen next? Are we going to have to start selling our positions? At what point are we going to start selling our positions? And of course, we're nowhere near that line in the sand, but this is how people are thinking. So difficult trading conditions at the moment, simply because of all this price action with Bitcoin. But of course, you can look at the point of control. You can take that as support. You could trade this range if you want to. But I mean, you have got the 4 hour 200 MA acting as resistance with confluence with this upper range, and then we could trade this range here. You could do that, but right now I think it's a waiting game, and if you want probabilities in your favor, sometimes you just need to wait for more structure. So I mean, that's generally my take on Bitcoin at the moment. It does seem to be affected, of course, by the news at the moment and other markets, and which is retesting the 50, but starting to look like we could see a retrace, a little bit of a deeper retrace, certainly back down to 100K, but maybe even a bit deeper. And if that happens, then it's a game of, are we going to lose the 1 day 200 MA again? So maybe we're going to see that retest of the 200 MA on the 1 day, which we haven't seen following this breakout.
Oh, yeah. Good point. Your screen is gone. Sorry, your screen is gone.
Oh, no. Well.
Oh, no.
Thanks for that, Lola. I thought, I thought you stopped your screen, and then Lola, and
yeah, it was up. It was up, yeah.
So yeah, sorry about that. Can you see it now? Yeah. So as I was saying, you can spend a half an hour or so looking at these charts. You can assess the fact that the 1 day 200 MA hasn't had a proper retest following this move back in the end of April. And then we see weakening price action, and we see at the bottom of this ideal retracement zone, which is around 95, you've got the 100 MA, the 200 MA quite flush, and obviously the 50 looks like it may not be able to hold the line for much longer unless we have a move up. So coming back down to this level, about 96, seems like it's on the cards if a bit of pressure or concern in the market continues. But other than that, we just need to see more price action, because obviously it's not there yet. So we've got nothing to trade. And if it does come down there, then that would be an ideal place to enter some altcoin longs, just like the 200 MA on the 1 day or the 12-hour is always a good place to enter. So that's kind of Bitcoin. Really, you know, we need to see where we are in a couple of days' time. And obviously, you know, all this sort of stuff at the moment, war, of course, is never good for markets on top of everything. But that's Bitcoin. I mean, any thoughts, Jannie, Michael, on that?
Yeah, I'm bearish.
Yeah. Well,
I'm bearish. I'm bearish.
Short term,
like
bearish.
Yeah, I think if you look at the 4-hour time frame, obviously I've already been through that, but I think the 98 level to me looks very, very attractive for a potential long if we can get that level, 98 level.
Yeah, this area. Yeah, for sure.
Yeah,
and that does line up with the.
I'm sure they're bearish for sure, especially if the daily closes.
Yeah, and I think there's the 98 level right here. Makes perfect sense. So if you are looking for a long entry in Bitcoin, or you're looking for a long entry in altcoins, this would be the ideal place to come in, and maybe just be a waiting game. But obviously, you know, once we watch for a candle body close on maybe the hourly or the 2 hour on the 50, and we could obviously get a move up from here. We could. That's very possible, and you could see something like this. But obviously, until we do have a move in either direction, it's a little bit difficult to trade, because, as Jannie says, the proximity to resistance is no good unless you're doing a short trade. And there are a few short setups we can talk about, so that's fine. Right, speaking of short setups, let's look at Dogecoin then. So Dogecoin is in this descending triangle of sorts, with a lot of pressure from the 200 MA and the 50. Shame on them for putting unnecessary pressure on Dogecoin. I mean, it's just honestly give it a break, right? Its name has been dragged through the bushes over the last few months, and it really needs, being efficiency for politicians, all kinds of stuff. So it needs a break, but it does look like it is breaking down, and that would give you a 15% short trade back to this kind of support area, and that seems to be happening at the moment. If we just zoom in, what sort of confirmation would you be looking for? Well, you're looking for a candle body close. This is the 2 hour chart. That might work for me. We've got 2 minutes to go, and it'll be interesting to see what reaction we get from Doge here. But obviously, wait for candle body close and then try and come in as flush as you can. And there's your trade. And then that Bitcoin kind of supports that if you lose the 50. So that's the general idea, but not many short setups I'd be recommending at the moment. But Doge is lining up quite nicely. ENA. We're starting to very subtly move around here on this momentum indicator, which I can't quite remember the title of it because it seems to be missing for some reason. But this is a long-term hold, and if you want to benefit from these dips in the altcoin market, then ENA could give you a nice entrance of this lower diagonal support. You may not get a flush entry, so you might want to start scaling in. Obviously, this is the weekly, so this is an insane long time frame. But if you can see what's happening. It looks like we're losing this area, and if we come back down here, that's a perfect entrance, and that would be really nice for a long-term hold. Save yourself all of the noise of all this short-term intraday stuff, and just get a nice entrance, and then just manage it from there. So that's ENA, something you can obviously look to get in on all this hesitation.
Sorry, Paul, your screen disappeared again.
Oh, really?
Your screen went out again.
Whoa.
Yeah.
We've been doing this a while. That hasn't happened. I'm so sorry. Please keep slapping me in the face whenever that happens. Metaphorically. Uni, again, Golden Cross, lots of volume, which is why the only reason why I'm bringing this to your attention. We have had a breakout. Now we're stuck here. The play would be for this straightforward breakout, but of course, you need to have, with hesitant market conditions like this, you want to have a clear criteria written down on a post-it note, what you want to see to keep probabilities in your favor. Because right now, with the market the way it is, and with Bitcoin doing what it's doing, we do need extra confirmation. So what you don't want to see is a little bit of a candle body close, and then you're trying to come in at a support buy like this. That's not enough. It's not enough right now. Okay, what you do need is to see this high surpassed and then come back down, and that will hopefully allow the price action to find its footing there. And of course, if the price action does manage to surpass this high, that means the market has turned a little bit more bullish. So that would be the play on the back of that golden cross and all of that volume. So, but again, have criteria that you need to see before you enter to keep probabilities in your favor. ICP, again, I've been wrestling with this. I don't think there's a potential option to come in here, but we are losing arguably the 200 MA and the 50. So my play for this was very straightforward. I was looking for something like this to come in again, just like we were talking about. Surpass the high, hasn't happened. And I mean, the reason why I give myself this criteria, which I was talking about this last week, and I have been popping in and out of this trade, is because I need it to be manageable. And if I don't get the exact criteria, I'm not going to enter, which is why I haven't. And then the price action's heading down now, and I'm in no trouble because I haven't entered, because I've had a very tight set of things I need to see in order to enter this trade, and I haven't seen it yet. Now, you could come in here, right? But for me, that's not really the play at the moment. But that's ICP. There's still lots of opportunities here, but it is a bit of a waiting game, as I do like this reversal pattern here, and I do like the price action and this golden cross, but challenging trading conditions. So do your due diligence on that. We just looked at Doge and AKT. As I keep saying AKT, ACT is two potential setups. The most obvious is a support entry here at this low volume node. That makes perfect sense, and it is the bottom, right? At least for recent price action. If you exclude this ridiculous launch wick. So this is kind of the bottom, at least the most recent price action over the last few months. So that would be a great buy to come in here. You might want to start scaling in around here, just so you don't miss an opportunity. But then the other side, if you do want to go long, then we've got a breakout of this resistance line. Will also have confluence with this moving average as well, which when the price action comes back down, you can have a nice confluence with the moving average as well. So there's two plays here. Just wait for support, which seems to be happening, or wait for a breakout on the flip side. But again, we're just trading this range because we're on a very strong downtrend. We haven't had any really bullish signals yet. So it would always be trading the range until we see some kind of confirmation of a move to a more bullish context. So be a support buy or breakout for ACT. And H bar has just invalidated every single premise. Ignore that.
Yeah.
But I mean, look, this one is thank you, H bar. Just done a video, won't be out for 24 hours.
Yeah.
Obviously, this isn't the bottom, unlike the previous one. So we've got plenty of price action below. So if you are wanting a setup for H bar, we do have this higher high, and you could just again wait for a breakout entry, this upper range, make sure it passes this high and come back down. That's the play, but we might be waiting a while for H bar now because we're in the process of invalidating. And if you do want to come in at support, of course, now you need to see maybe a break up and back down. So H bar probably not a great setup at the moment. But what do we need to see from the money flow? Well, this is quite good actually to trade because Bitcoin dominance is sitting quite high up here. And obviously when it goes down, hence why it goes green, that is good for altcoin trading because that means money flowing to the altcoin market. But if you're looking for Doge, that short setup, all you need to do is look for a break above this range, this little micro range which we've been in, and then that will give you the signal potentially that the whole pattern is invalidated and that a move upwards from here is quite likely, which may allow Doge's short setup to play out quite nicely. Or if we get a break in the other direction, again, this little range here, and I'll just draw some little ray there. So just you can just draw these lines in the sand, as I like to say, and any break below, then you can enter some long positions if they are lined up with what Bitcoin is doing. Any movement towards the golden zone here will probably give us a week or so of good price action. I'm not sure we're going to see that because of world events, unfortunately, but I'm trying to give you something trade-off if you are so inclined. But that's me, I think, today. Run through some setups.
Actually, you have a question from Robert. He wants to know if you have any thoughts on Sol. Robert, I thought you hated Sol.
Did I lose my screen again?
You did, yeah. Just now,
yeah.
All right. What? Robert, Sol. Let's have a look at Sol. All right, I need to share my screen again. What is going on with this?
Probably some issues with StreamYard, I don't know.
Yeah, it's
You do hate that thing. Like, are you like sadistic, Robert? You want to look at something painful?
Right, Robert.
Well,
with love, I was thinking about you. Oh, hello. Sorry. Let me just stop that for a minute. I'll share in a second. Robert, I was thinking about you the other day when I was doing a podcast with Lara, psychologist. we were talking about the fact that some people struggle to, when they have a bad trade, they can't touch that token again. Right. And why is that? Right. Because it's a safety thing. We're trying to protect ourselves. Right. And I used you as an example. And what I'm going to say to you, Robert, is whatever we find at the moment when we look at Sol, I want you to be trying to find an opportunity to engage with Sol again. Right. I think you need to make up, and you need to realize that Sol has some good trades left in it. Right. It hasn't left you. You've left it. Right. The door is still open. Right. So
you need what is it? Couples therapy between between the two of you, between Sol and Robert. So, you guys need to make up. You guys need to
make up.
Why don't we let's do a blank setup so there's no bias. Sol, do it really quickly because I'm sure Jannie's got some more interesting things to talk about. So let's have a look at Sol. Right.
I can make something up. I'm sure. Yeah. Carry on.
Well, it looks like I'm about to make something up. So let's have a look. Okay. Bullish range, consolidation, lower consolidation, transitory space. Okay. Lots of big words to make myself look impressive. Right. Okay. So let's have a look. So we've had a dip out of this range. That's bearish. But it looked like we are in this range at the moment. Let's see what some moving averages are doing. Honestly, I really want to find you a really welcoming setup, Robert, but I don't think we're going to get it today. Let's just get rid of some of these. Let's try and answer.
Yeah, the last thing you want to do, Paul, is to give Robert a potential setup, and then he loses again. That's just going to make the relationship even worse between him and Sol.
So yeah, okay. So we got a death cross. This is the daily, significant time frame. Right, we are looking bearish, but we're trying to have a recovery of sorts. So let's see. I think the only play I can see right now is a waiting game, right? And you could draw a pattern, you could get cute and trying to follow this all the way down, but ultimately the play appears to be wait for a breakout of this range or come in at the bottom, right? For that touch here, but it's a bit because the moving average is in the wrong place. So really. It's, if we get a move here, then that would be the play potentially to get into this upper range. Therefore, you can retake the bullish context and you've got a couple of ranges to trade. But unfortunately, that looks like a bit of a tall order for the price action. So we may be wanting to see where Sol is going to stop. And I'm guessing without putting fib levels on that this is the area which we could see entering perhaps before we move around here.
Who's got their YouTube channel running or YouTube video running? Because we can hear it here in our ears here.
So maybe you're looking for something like this, Robert, right? But ultimately, I think we don't want you to jump straight back into Sol, right? You need to just like hang around with it for a little bit, right? Just get to know it again. It might maybe accident, just like brush each other's hands slightly, just gently, with a little bit of romance, right? And then by the time you've got more comfortable again with just being in Sol's presence, then we might have some more price action for you to trade off. So
buy him a couple of drinks,
buy a couple of drinks, and then by the time it's had that, it's probably going to be down here or it might be up here, and I'd be more willing to give you what you need from it, right? So maybe that's it. Quarter again, exactly.
Yeah. Well, if I look at that chart, my opinion would just be stay away from it.
Yeah, be swipe left, but that's what we're talking about.
Swipe left. Block. Swipe left and block.
Swipe left.
Yeah. All right. Let's. I think I just want to have a look at. The only thing I don't like about this. As you know, this MT4 platform is that I can't. Yeah, I think he had like YouTube playing in the background. Could you hear it coming through as well?
Yeah.
Okay, but anyway, I wanted to look at the Euro Aussie because he was mentioning the Euro Aussie earlier. I'm just going to have a bit of a tough time looking at this Hola Prime MT5 because there's not enough data. So I'm just looking if I can open the, what's that other platform? Match Trader. So I'm just going to see if I can quickly find that. Okay, just so bear with me. You can maybe sing us a song while we wait, since you are a musician. If you don't mind, Paul. Everybody's waiting. No?
Sure. There once was a girl from Poughkeepsie. What?
Okay, I'm just loading. Yeah, all right. Log in.
Whenever she went dating, she was a little bit tricksy. Right.
Is that your song? Do you write that? You did say you're not a very good songwriter.
I do sing backing vocals and stuff, but I got a terrible voice. I can pitch when other people are around me, but I've got a terrible voice. It's awful. You don't want it. It'll crack webcams.
Okay. Just move this over here. Okay, so that will do. Now I can share my screen. So let's have a look. Good. So this was like one of those just those random setups that we decided to just have a look at and to make things a little bit more interesting. So let me just, if I can just find the screen. Not that I have like many. Okay, there we go. So what's this? This is the pound US dollar. We don't want to look at that. I want to look at the euro Aussie, and I just want to remind you what we've been looking at, and I haven't really touched on it again. AUD. Okay. So you'll remember, where's Michael? Oh, there he is.
Oh,
welcome back, Michael.
Thank you. Not sure what that was about.
Probably pressed the wrong buy and sell button. Okay, but let's have a look. Let's have a look at. Okay, so this was actually we just looked at the single candle. We didn't look at anything else. We didn't look at structure, nothing like that. We just looked at this monthly candle, how that closed, and then just, you know, again, just based on this candle formation, could this trade into this lower shadow? And obviously it did, but not nearly as deep as I thought it would. So I just wanted to see, yeah, I don't think the bearish context is in play right now for the Euro Aussie. I think this looks definitely more bullish than bearish. I'm just looking at that because if it breaks the, especially when you get like a bearish inside candle like this on any time frame, then the probability for this to trade into the shadow is very high. But if it trades into the shadow and then reverses and then breaks that high, you've lost that bearish context. Right. And I think, Michael, you've just touched on this briefly earlier. See, this is why I'm not a fan of this platform, because every time you change time frames, you need to like do this. But you were looking at, I think, the 4-hour time frame. Was that right, Michael? Yeah. So I would like to know.
I was looking at the 1 hour.
The 1 hour? Let's have a look. Need ton of. This is a very good platform if you want to like. Oh, sorry, I just saw the private chat. This is a very good platform if you want to practice your patience. Very good. Patience is very important in trading. So this is one way you can practice that and get very good. I'm going to go to the 4-hour time frame. I want to mark out some obvious levels of interest, and the first one that I can just see over here is this this support level here. The problem I have with this support level, let me just draw that line there, is that it's not, well, you got that flush bounce and then that bullish candle up there. That to me is that was your bullish kind of sign, but now you broke through it, and that just makes things complicated. So I would not be interested if it just breaks up higher right now. I would probably be looking for something else, which is the next level down. So for me, if you have a very strong support level and you bounce off it, if you come back to it, then it's fine if you just come back to that level. But if you break below it and then bounce back up, to me, that support level is just not the same. Okay, it's much weaker compared to the first time you trade off that level. So I would not be interested in a long right there. I would rather look at, well, first, let me just show you what I like to look at typically. Is like when I see a steep rally like that, and you've seen me done this 100 times by now. Whoops, you haven't seen me do it. I'm not doing that 100 times, but right? If you see that steep kind of angle rally, it's going to come to an end and it's going to correct. And that's where you use, that's typically when I use Fibonacci levels, right? You should know that by now. Place many trades based off just that idea. Okay, so I'm going to do a very similar thing here, not similar, exactly the same. And then I will probably want to see price retracing to, come on. There we go. Let me just look back at that. Okay. I'll probably look for price action at ideally the 61.8. And I'll tell you why the 61.8, because, it's all about confluences. If you can get confluences between a level of interest, because remember, Fibonacci retracement levels, they fall into the support resistance category, but there are 3 different categories, right? It's your static levels, horizontal lines, static support resistance. Then you get your dynamic levels. So they typically your moving averages, and then you get your discretionary levels. Those are levels those are basically your diagonal lines and your Fibonacci levels. Okay, and the strongest levels will always be your horizontal, based on price action itself. Okay, support, resistance, daily support, daily resistance. Those are typically much stronger than your discretionary levels. So that for this one, what I like to see with the FIB levels is also some confluences on price action itself. And I think the 61.8 makes most sense, okay? So the 61.8, you can see we've got some confluences here on price action itself. So the 61.8 would be great. But as I always say, you don't just press the button when it gets to that level. You want to see how price action behaves at that level. Right? You want to see, price action reversing and then moving away from that. And that could happen between the 50 and the 61.8. Okay, sometimes it just kind of misses it. But you want to see something like, maybe like a hammer candle or an engulfing candle, or maybe a pattern on the smaller time frames, like a double bottom formation, or even a head and shoulders. Don't wait for head and shoulders on the 4 hour. You may want to find that on a smaller time frame, right? Maybe the 15-minute or something like that. So a confirmation of that level, I think that would make sense to go long on the Euro Aussie, even though it's not something I trade. It's just a pair that we looked at. When was that, Paul? 2 weeks ago?
I lose track of time.
You won't remember. Yeah, you won't. I don't know why I ask you. You'll never remember. You don't listen half the time, Paul.
What price point is that? What price point is that? 61.8.
That's 1.76069.
Okay.
Yeah, there's just a very strong confluence. Now, let me just point something out. I don't always get the levels that I wait for, right? Like let me go back to that the pound US dollar. You'll remember this one. What was that level I was waiting for? Over here. Yeah, I was waiting, and maybe hope is a better word. I was really hoping for this level, 1.301, because that would have been such a, as I always said, that would have been trade of the year, and it would have been trade of the year. But I never got the level, so that's something you need to keep in mind. You can identify the levels that you wait for. It doesn't mean you're going to get it, right? So. But you still need to have some sort of framework, like what are the levels of interest and what's your bias and that sort of thing. And then you want to, pay attention to price action, wait for those levels. Now, in this particular case, obviously the bias changed once we broke that diagonal line, which basically meant that this inverted head and shoulders pattern and the entire bearish bias is completely gone. That's it. It's completely invalidated. Now your bias shifts to bullish, okay, full on bullish. So that is basically what I was trying to say. Well, the GUI trade. Yeah, that's basically what I'm trying to say. Yeah, on the 4 hour time frame, right? I'm waiting for that level, or based on what we saw on the longer time frames. If you are bullish, then this level would make a lot of sense. Now, that doesn't mean you're going to get it, okay? If you don't get it, you don't get it, and then you're just going to have to just try to stay in sync with price action, what it's doing. For example, if this is the low and it's going to break that high, then you'll adapt to what's happened, and then you'll identify this highest point as the resistance, and then maybe a breakout from that level, and then retesting it, and that could be your next play. Does that make sense? You don't know what's going to happen. You can only kind of identify the levels of interest, and then how you will play it once it does go to the level that you've identified. So that's the Euro Aussie. Is there anything else that people would like to have a look at? Actually, I think we looked at the dollar yen yesterday. Just out of interest, we identified what did we identify? Oh, gee, look at all these lines. I could probably leave that one on there and delete the rest. That was just to point out that there are so many different kind of little pivots here that if you were short and you tried to trade a retest of a breakout, like which breakout are you exactly referring to? Okay, because there are so many different levels. That's just where that came from. But what we did yesterday is we were trading here, and we just identified the nearest high, so nearest resistance, nearest support level, and we identified this diagonal line over here. And well, obviously prices just pushed to the upside. So this is going to be interesting. Like we need to, like, it doesn't mean that this is now over and we're going to go all bullish, because you have this resistance area, and even though you are now outside of the diagonal line, it's not very, I mean, I wouldn't feel comfortable to say, yeah, we definitely broke that diagonal line, because we're still right at it. You can still trade away from it, maybe a bit of a cluster of candles, and then move much lower, and then you'll see, okay, that was obviously, it found resistance at that diagonal line. So it's still a bit too soon to, I'm still bearish on the dollar yen in general. Okay, so we'll see how that plays out. What do you guys make of the move that, or the price action that's been added to the chart since we looked at it yesterday?
Well, it just doesn't really add much, does it? I mean, it's sorry. You've got those conflicting. You've got resistance overhead still, even though we've popped ahead above the diagonal line. Yeah. So it's just that's, it's not helpful, because now the price action's trapped, and therefore when it's trapped, and the market may be a bit hesitant, I could just see that rolling back down straight underneath again.
Yeah. It's definitely struggling here at this diagonal line. But also at the same time, very difficult to trade. Very difficult to trade where it is right now. Even if you have a very clear bias, it's a bit tricky to trade right now. So you're just going to have to wait for price action to make sense. What I mean by making sense is it needs to trade off a level of interest, which we don't kind of have right now. Right?
You need something more clear. For
yeah,
UJ.
You just need a clear.
I took UJ short on June 4th. It was a Wednesday. It was fine. Like it was perfect actually. But from there, it's just been funky. Like since it's turned around, it's just like in a weird spot, really.
Yeah, it is. It's a bit tricky to trade it right now. But I was like, when we looked at this yesterday, ideally, if we could have moved much lower and then pulled back, that would have been ideal. But we're not getting that, right? We're just pushing higher. So it's just a case of just stand back, just wait for more candles to get added to the chart, and wait for something clear and obvious. Stock trader, he says Fed pause bets. If war spooks the Fed, USD momentum fades versus JPY. Yeah, you see all these this war and all the other things that Paul also mentioned earlier. It makes something that's already very difficult, which is trading, even more difficult. It does make it tricky. It really does. So honestly, this is probably a time to just be extra cautious, and
it's like trying to get a tattoo while you're driving off road, right? It's like nearly impossible, right? That's the sort of thing we're dealing with here as traders. It's like not ideal circumstances, but nonetheless we're trying to give ourselves a tattoo nonetheless, and it's not going well, and that's kind of
give yourself a tattoo. Yeah. on your back, yeah, right
So
there.
what are you supposed to do?
Your ex-girlfriend's name. Oh god, what would you do?
B-I. What was the next letter? I don't know.
B-I? Girl's name starts with B-I.
Yeah, it does. At least my all of them.
All of them.
Yep.
Okay. Okay.
I am
right.
joking. Of course, I'm in a very good relationship with ex-girlfriends.
I was a bit slow on that one. All right. Bianca, obviously. Come on. I need to really get with the program. Yeah. So anyway, I'm not really looking at anything else right now. Yeah. I mean, I think in terms of gold, I mean, what's your take on gold? Obviously, this bounce off this diagonal line when it broke out came back for that retest of that line. That was a I didn't take that trade, just to be clear, but that would have been an opportunity up to that resistance level, and then we broke out. And where we are right now, obviously that support level is not holding. Where do you see that? Well, first of all, can you make out a clear picture in terms of what's going on with gold on the chart, or are you pretty much neutral? What do you think, Paul?
Neutral, totally neutral.
Yeah. How about you, Michael?
Yeah, this would need to close above to me. Like if we get a close above price 3,400, then I'll be long. But right now, no. I'm just waiting.
Yeah. What about you, stock trader? Do you trade gold or not really? Yeah, gold trader. It'd be interesting to get your take on gold. If that's something you look at. I'm not sure if gold is something you pay attention to. Yeah, and the NASDAQ. Let's have a look at what the NASDAQ's doing. Obviously, it looks like we're having an update. No, we're not. The people are getting. I think if you are scalping the NASDAQ, oh, you do. Okay, gold, silver, and crude. Oh, nice. Okay, yeah. So, do you have any strong position on gold? What's your? Are you bullish, bearish, or are you also neutral? Or what's your take on gold? But anyway, what I was going to say look at this. I just stayed away from shorter term on the NASDAQ for how many weeks has it been? It's basically since we've been approaching these highs. I just know it's going to be rough. Be interesting to know how they. Well, Michael, you were on the sessions where the people who strictly focus on short term scalping. How's it going? Are they probably? But they look at not necessarily the NASDAQ, but they do. Eamon does so.
Yeah, Eamon trades NQ and Sam trades ES. Funny enough, they were in a competition.
Oh, really?
They scalping, yeah. They both scalping, yeah. They was in a competition, basically, whoever had the most best trades, obviously. So Sam had to trade NQ last week. Now this week, Eamon is trading ES. So I'm not sure because they switched, basically.
Oh, okay. But I mean, in terms of what are their opinions on? Just because obviously I'm not, I don't see their sessions. But what's their? Do you know? Do they have a general take on what the market has been like over the last couple of weeks? Has it been difficult to trade or not really?
Not really so much for Sam. Eamon shorts and buys no matter what. Like he likes to chop a little bit. We make jokes and say he performs well when it's chopped.
Okay, that's great. Yeah. So for me personally, I don't do too well when it's like this. So no, it was just interesting to hear. This is very, very rough, in my opinion. Yeah. So, but the last 4 hours definitely pushed to the upside, but on the daily, we're still below the open. We'll see. The NASDAQ is very different to Forex pairs, obviously. In the last 4 hours of the New York session, Forex really dies down in terms of it becomes like watching paint dry. It becomes so slow in Forex. But
I agree.
The indices are different.
That's why for me, I typically don't trade currency pairs after 12 Eastern. But I'll still trade NQ, ES, US30, gold, Bitcoin. I'll trade those to about 2 o'clock because they still move.
Yeah. I agree, and you agree, and Paul, he probably agrees as well, right?
I honestly think you're having a vacation, and I'm just going to trade Forex. That's it.
All right, so stock trade, you are bullish, okay? So on silver, yeah. Okay, you said gold. Gold crude. You are crude on gold. Okay, maybe there was a bit of a typo there, but maybe I don't know. But anyway, everybody watching, unfortunately, we've come to the end of the session. The next session starts in half an hour from now. So, the Lola stock trader, I don't know what your real name is. I'm just going to call you stock trader. Robert, everybody else watching, thanks for
watching. That's his real name.
That's going to be your name from now on, stock trader.
ST.
You've been mugged. ST. Yeah. I hope you don't have yeah. You just be glad you don't have a dollar at the end of your name. Otherwise, your acronym would have looked different. But anyway, all right, guys, it was great to see you all. Have a great evening or morning wherever you are in the world. And from us, enjoy the rest of your day, and we'll see you tomorrow. Cheers for now.
Yeah. All right, everybody. Take it easy. All right, Jannie.
Hello, everyone. Hello, Iris. Lovely to meet you. Hi, Eamon.
Hi, Sam. Hi. How do I pronounce your name?
Eamon.
Eamon. Yeah. Hi. Nice to meet you guys. My apologies for the setup. I just moved into here and had to improvise a little bit. I feel like a fortune teller. My magic quote here.
That would be helpful as a trader. If you can.
Yeah, I can tell you it was not going to be a good day today, but am I clear?
Yeah, perfect. Crystal clear. Audio is good. I actually really like the backdrop, all the different paintings. It looks really nice.
Very artistic. Yeah, it's not mine. The credit goes to the place I'm renting it from. So, but it's actually really nice. But yeah.
Awesome. Yeah. Well, it's awesome to have you on here. I hope your trading day went really well. And you too as well, Eamon, of course. Can't forget you.
Yeah.
How was everyone's trading day?
I actually didn't. I put on a few paper trades today. I had a few things I look at, and those things already told me that the morning session wouldn't be in my favor. And I put on a few paper trades, and two of them were losing, and one of them was I took. It took me in profit, but then it took my stop loss in profit because I changed it. So, sure. But yeah, how are you guys? Yeah,
pretty hectic one. I went a bit overboard with my scalping. I think I ended up in profit, so I'm happy. But I'll show it later in the session.
Yes,
I went a bit crazy. Over traded maybe a little bit too much.
as you know, Sam, like I like more, let's say, ranging markets. So yesterday I did bad, but today it was ranging. I knew it would be ranging, so I was just scalping like the high to the lows. So I had pretty good day today.
Well, good to hear. Good to hear. Well, what I'll do is I'll kick it off. I'll share my charts and I'll what do you call it? Show the kind of trading day I had. So bear with me 2 seconds as I try to get this up. What am I doing? Here we go. Share screen. It does take a few seconds to get this going sometimes. I feel my internet hasn't been great recently. Oh, here we go. Finally. All right. Awesome. We had on the S&P, we had a very choppy day. I was generally more bullish than bearish, just because we tapped into this this lovely gap in volume here. and it rejected it twice, a nice double bottom pattern. So I was kind of more generally bullish, but I was expecting it to kind of go a bit higher, and then we just had this chop. Now, luckily, I did a few times when I scalped, I did get stopped out on very. I look back now in hindsight, and I think that was silly. I should have been a bit more patient. But overall, I wouldn't say it was a terrible day. I couldn't tell you exactly where I entered, where I exited, because it was just a complete. I took so many trades today. Again, Eamon, you know how I usually trade. I take one trade a day, maybe, 1 or 2 trades a day. Today, I was just trying to scalp it here, there, left, right, center. There were so many different gaps. The footprint was looking nice on so many different places. So I kind of just went a bit overboard. But when I hit 1,000, I was done. It was kind of psychological for me. That was done. I didn't want to risk losing anymore or potentially, wiping out what I made today. So not my best trading day. Normally when there's a nice, good move, I can pile on the positions. I never really piled on positions. At most only took 2 positions at once. So I wasn't really able to ever scale in just because of all that chop. But overall, I think it wasn't a terrible day. I couldn't tell you exactly, on each trade what I saw, because at the time it was very much live on how the footprint was actually producing, how the numbers were looking on the actual depth of market. So I couldn't kind of replay that without having to actually record the screen. But yeah, we had a big battle going on, especially in this ranging area today. We saw a lot of big contracts on the footprint. I could only kind of keep track of the market from market open. So when I say market open, I mean the US Open, which is here. So we had actually heavy sellers come in first on the US Open, right? So if I just, heavy selling came in first, and then as it went against them, you can start seeing these sellers getting out the market, probably not getting stopped out, but actively choosing to get out the market, and then buyers coming in as well, and then more sellers coming in, or maybe buyers exiting, hard to say, and then more buyers came in, and then slowly these buyers started taking control of the market and were actually able to push up the market. So around this area, I was very much more bullish, but then we just kind of failed to kind of get higher than here. Sellers were just absorbing a lot of the buy pressure, even though heavy buying still was occurring. You can see where the buyers started dropping off as it started reversing. You see all these buyers getting out again. And then we had this another little push up, more buyers trying to buy the break. Just as we broke this high, you can see all these contracts coming in, all these breakout traders coming in, and then it goes very quickly against them. And that would actually be a great short position right there, to be honest. Just seeing that all that buy pressure built up and trapped, and then as they start dropping off here, you could definitely have shorted the market. And then again, sellers trying to buy the break. Sorry,
Sam, you're not on New York time, right? Because I'm confused. I'm just looking at your time.
This is UK
okay,
time.
But now see your UTC 1. So I'm like, huh? When were you trading? Was it yesterday's trade? No, I got it. Okay, I've got it. Yes.
Yeah, I do apologize. I should have pointed that out. This is UK time. So 2:30 p.m. UK time is 9:30 a.m. New York time. So I think they're 4 or 5 hours behind.
Are you both UK based?
Eamon is based in Poland, I believe, right?
Yeah.
Awesome. So you're an hour ahead of me, I think.
Yeah,
Eamon.
1 hour ahead of you. Yeah.
Where are you based, Iris?
So I'm currently in South Africa, but I'm Dutch, but I'm digital nomad, so I'm just traveling around. But I always have everything on New York time, so just to
okay.
So yeah, so I was like, huh? But no, it's fine. It's easy to converse once I know it. Yeah.
Yeah, no, that makes perfect sense. It's probably actually a good idea as well to kind of adjust your times on your platforms to match the New York times. That is not a bad idea, actually, because there's many times where I'm looking at news and I'm trying to do the conversion in my head, and it can lead to silly mistakes sometimes if you're not completely right on the time zone. But back to the chart, and then we just kind of had a ranging market for a bit. And I mean, at this point, I've already stopped trading, so this is all new to me right now. I'm just seeing it for the first time. But yeah, we did have heavy sellers come in again, piled up on 2 price areas right there, and they have seemed to be quite effective in pushing the market down. And that's really what you want to kind of be looking for, right? You want to look how effective. If you're seeing a lot of big heavy numbers coming in on the delta, you got to ask yourself, are they actually doing anything? Is the market actually moving in their favor? We had 600 contracts on the delta for the buy side here, but they literally did not move the market. The market didn't go any higher than here. So that's a very clear sign, especially backing up with these very powerful sellers here. Very clear sign in that moment. There's a good chance we're probably going to be pushing down. And you could have a very nice tight stop loss, maybe just above that candle, and target anywhere in structure where you think might be fitting. But so there are always opportunities with the footprint. You just kind of, sadly, a lot of time just have to sit there and wait for something to happen. But that is half of trading, right? Sitting and waiting. But I am hoping that the market moves out of this zone, because as you can see, my charts have become very messy. I've got so many different zones now listed. I should really start clearing them up, make them look a bit more neater. But yeah, that was my trading days. So let me.
I want to share something with you guys.
Please do. Absolutely, please do.
So I've been doing a lot of, because I've been traveling. I have engaged. I stopped trading, but I didn't stop looking at the market and forward testing stuff. And I've been forward testing, so I trade ICT and time, and I've been testing the news candle. And for today's news candle, for example, if you just measure, do you use standard deviations as well with footprint?
I don't. I personally don't. No.
Oh, okay. So for today's, when there's chop and when there's when there's consolidation, like today's day, if you have a news candle like today, so the 8:30 candle, it went exactly the bodies, not the wicks, exactly to 0.5. But also just the move down, exactly 0.5.
Iris, do you want to share your actual screen, because we can't actually see it at this moment in time? Yeah.
Yeah. How do I do that? Let me just.
There's a present button at the bottom.
Yeah. Okay.
And then you should be able to select which window, or you can share the entire screen.
Let me see, present, and then it says slides and PDF. Or video file. Share screen.
Share screen. Okay. Yeah.
Let me see. I have one only. Okay. Screen sharing is easiest with 2 monitors. Well, I've got only one. I've got on my laptop now. Which one
monitor's fine.
If I do share screen, it's going to do this screen probably. Well, we'll see what happens.
Oh no, it'll pop up with a option of what you want to share.
Okay, let me just go here. I'm sorry, guys.
That's okay. Take your time.
Window. Oh, there we go. Yeah, let me do this one. Sure.
Perfect.
There we go. Yeah. So,
awesome.
You can see it? Yeah.
Yes, we can.
Yeah.
So today, what I said about, for me, is I already thought, it's not going to be a day for my AM session to trade, because as you see here, the 4 o'clock, I've got different scenarios that I look at, but today it was like, okay, the 4 o'clock is very important to me if I'm pre-market, and I see it's being like it's pulled towards it like a magnet, so this is New York time, right? So you see here, New York time, 4 o'clock. And then in London, it just keeps on pulling back to the 4 o'clock. then it goes back to it at 6:45 underneath it, and then above it, and then before open, it goes back into it. If the 4 o'clock is if it's interesting for me, then it should pull away from the 4 o'clock a little bit further, and then it might go in the block from the pre-market to 11 o'clock. It might pull back to it, or it goes back to a further one. But you see here the one day before, you see how it just lines up exactly. It goes back to it, and the 6:45 candle, boom, it's already done. So I already know then, okay, we're not going to get a good move towards that candle. It's just one of my models that I trade, but for me, it's already, okay, it's until 11 o'clock, there is no trade for me, because that is how I've been backtesting this like 3 years back or something. And so that gives me a good indication. But okay, this is a news candle. I was so happy, and that's also something I'm backtesting a lot. So you see here, I just took the 8:30 candle. Can you see that?
Yeah.
And exactly 0.5, and it stopped there. And sometimes it goes, these are my levels. Sometimes 125 works as well. That's what I've backtested, but it's just stopped here and it just stayed in this range, right? So I was already thinking, okay, well, what is it going to do afterwards? And see here how it just 0.5 to the down, to the down. You see where it ended? Isn't it amazing? I just love that. So yeah, so that's what I'm just been doing without, I haven't put on live trades recently because I'm just busy moving and traveling, but I'm still testing and back testing this. But I just want to share this with you because I was just so excited again, news candle, and just using the, just measuring and just going at it. Yeah.
That's
so
fascinating.
that was nice to see. It is really fascinating. Yeah, it is.
And you do that only to the news candles?
Well, when there is an 8:30 candle, yes, especially the 8:30 candle, I do. I live in Fib City. I have other screens where I do a lot of measurements to calculate moves. But this news candle is something I've been backtesting for a while now, and I've really. So if it would go underneath this, you know, it's sort of like I just need 3 confluences. But then again, like for example, if it would go to my 1, this is my settlement price. So that's the yesterday's settlements price. And I've got another confluence somewhere, which I calculated. So if it would go to the upside, I would have confidence that it would definitely go to this level and, you know, to this area. But it went down. And to be honest, I don't really feel the market today. I have to be just honest. So I'm like, okay, I just see this, that it reached that 0.5. But yeah, that's just for me. It's just another thing nice to just discover. It just it went exactly up to the up and to the downs. Yeah.
Yeah. No, I mean, you never stop learning and you never stop backtesting things. I mean, to this day, I still try random things and start backtesting. It's almost like a hobby. I think as long as you never lose that passion for trading, you keep.
Yeah. You're never done. Yeah, I agree. Yeah, I love watching it.
If I may ask, like, what concept, like, on ICT you are using exactly?
So I've really focused on the breaker, for example, and market maker sell and buy models in general. So it's just really like, okay, where. So when you use the standard deviations, and you can. You know, when you reach four standard deviations from a certain, like say from a breaker, you have your 2.5, and then, you know, you have your retracements. But for me, the breaker is a very interesting one because I love the retest of the breaker. Those trades are, for me, my best. But then I'm also very time-based. I combine ICT with time. I can show you another screen if you want to.
Yeah, absolutely.
Yeah. So hold on. Let me just see. I go to present again, I guess. And let me just. How do I go to another screen?
So there should be a like stop presenting button. Yeah, and then the same process again. Hit present, share screen, and etc.
Okay, share screen, and then it will give me all my. Okay, then I need to go to my other screen, and I have to give credit to some other people here. I asked them in advance if I was allowed, because this is part of my trading style. So I checked with them if I was allowed to do that, and of course I can. Okay, let me just window, and here we go. So share, yeah. So this is called DTT. They use root candles and AMRP levels. You see those gray boxes? Those are average model range probability ranges, and that's all calculated. And this is all. I hope you can see it properly.
Yeah.
So these are all root candles. Like my orange boxes are root candles, and these are first presented fair value gaps. So also what I do with ICT, I use ranges, and I calculate things from those ranges. So this is, for example, the first presented fair value gap on the 5-minute of the London session. As you can see here, how it moves back to it, and here also the bodies go into it and to half of the presented fair value gap. So I've got multiple times, and this is the midnight. Let me see. Yeah, this is the midnight one, and here is midnight. So I use I combine all these things together, and this one is the. Let me see. Yeah, so this is the 9:31, yesterday's. So that's yesterday's one. And yeah.
Like if I can ask, sorry, like you like to draw your fair value gap more on which time frame, like?
So these are not fair value gaps. These are first presented fair. Well, these are first presented fair value gaps. This is automated. So this is an automated indicator that I use. Yes. Right. So I'm not drawing this myself, but I prefer 3. To be honest, I like the 3-minute, but I do trade on the 15 seconds sometimes. Or I'm also a scalper. But for this, because those root candles are also is an indicator. And for example, also why I knew this afternoon or this morning AM session would not be mine. If you have stacked root candles, it already sort of like predicts chop. Yeah, this is something I've been using for I think a year now. And these root candles is just amazing. And this is like intraday, but there's also weeklies. So you see the weekly and also a yearly candle. So now you see that it's going beneath the AMRP level on for this session. So most likely it will draw to a former session that it didn't go to. And plus I have an old fair value gap, first presented fair value gap of one other time frame. So yeah, and then I use my calculations obviously, but yeah, so that's how I use. So I'm ICT plus very much time based, and just looking at the algo. So constantly looking at what are the signatures of the algo? What am I looking for? Where are we going? And well, here you see that. To be honest, I don't know. I've tried to figure out how they these automated standard deviations, how they calculate them. But I haven't figured that out. So, but it's amazing how you see how it respects those levels. It sort of feels like cheats a little bit. And obviously, I put the 4 o'clock and some other times on it, and it sort of like helps you these times. Helps you, like ICT uses macros, right? So that's also time based. But this goes a little bit further than the macros beside the macros. But obviously, I use that as well. So yeah, yeah, it's very. I mean, when I feel the market, I'm just very much into these screens, and I just yeah. But today not. But I still love being in the market, even though I'm not trading and I'm just paper trading around and learning from you guys as well. What you guys are doing.
Yeah, no, absolutely. This looks fascinating. I mean,
it looks fascinating. Like for me, it's the first time meeting a trader who traded 3 minutes. So I am glad.
Yes,
because
that's true.
when I joined, like I told Sam that I'm using the 3 minutes, the 30 second, but He said first time meeting someone trading the 3 minutes. So you are the second one.
Now you have a friend, Eamon.
Yeah.
Both 3 minute chart traders.
3 minutes, 30 seconds, 15 seconds. So
you also do so you like to swap between the different time frames.
Yeah, for me, like when I see, for example, the market is trending, like the move already started, so I use the 3 minutes and the 30 second. I see that there is a combination between the 3 minute 30 seconds, so I wait for a specific type of candlesticks to trade the continuation with the momentum. Let's say if we are going up. So
you do the 369. Are you 369 guy?
I'm not sure what does it mean. 369.
No, I mean, you can't. Well, you said 3 and 6, so.
For me, like it's just 3 minutes and 30 seconds. I feel like there is a correlation because when there is some type of movement that I am looking for on the 3 minutes, I see the similar movements happening on the 30 second as confirmation. So if it's, but it's working more not in ranging markets. It's just when it's trending and the move already starts, so you can join for a couple of scalps. So that's how we use the 3 and the 30 second. But other than that, sorry, Sam, go ahead.
No, carry on, please, carry on.
No, other than that, I'm using just top-down analysis, higher time frame zone, and I use the footprint. For example, for me, it's key just to understand if we are ranging or trending, just to see how I would trade for the day. For example, today we were ranging, so I was looking for momentum candle, big candles to the demand, see the absorption buyback higher, and repeat the same thing when it's ranging. So,
Interesting. I mean, I've never tried a 3 minute candle, but I think I might actually have a little exploration with it, because my thinking was always use a candle that a lot of other traders generally would use, right? So 1 minute, 5 minute, 15, etc. And I generally 5 and 1 minute are the two I use. I do use 15 as well for overall structure, but that's not for entries. But you come to think of it, I don't see why that would matter too much if you were to change that time frame, because I always thought that the end of a candle, a significant candle, will have an impact, and I think that is true with the hour candle, maybe the 15-minute candle. But I think when it goes to such smaller time frames, I don't think it really has much of an impact. So maybe on the 3 minute you can see more. So I'll definitely be checking it out. Actually, there might be something to it.
Interesting. Because with the first presented value gap, when you change obviously from 1 to 5 or 3, it's a different fair value gap, obviously. And sometimes I notice on the 3, when I'm looking like when the market is a little bit, it's just not that, the market has been a little bit challenging sometimes. On the 3, it just gives a different presentation, and I just see sometimes more on the 3 than on the 1.
Yeah.
But I always go back to the 1. That's my main. But I always check. I have an extra screen with always 3. For some reason. Yeah, I start loving this 3. I don't know why, but it's I prefer the 3 over the 5.
Wow. Well, you've both convinced me. I'm gonna give it a go. Tomorrow I'm gonna check out the 3 minute chart.
Yeah. So do you use the footprint together with candlestick charts?
Yeah, so I only used a candlestick chart just to see kind of, because the footprint has a tendency to kind of distort what's actually happening. So you can't really tell when it moves. For example, the market moves quite large or quite a lot. You can't tell how much it's moved on the footprint because everything looks really small and kind of squashed together. The candles is where you can really get the idea of, the structure of the market, where you are, because the footprint, you have to be so zoomed in to see all the numbers. You can't see what's far away on the left. So on the candles, it just gives you that bigger picture. I find it one without the other. I couldn't trade. I need the candles to know where I am, and the footprint to know exactly what's going inside a candle, so I can make my decision of entering and exiting. So they're both equally important almost for me.
Have you done TPO? Are you familiar with TPO?
Time price opportunity.
Well,
market profile, yeah.
Yeah, I've done that, but and then I discovered is that, I don't know, footprint is sort of like goes into that area, or is it a little bit different?
It's part of the same umbrella. I personally prefer the volume profile. But it's, if you put the volume profile, market profile next to each other, they're almost 99% identical.
Yeah.
I mean, one measures time, how long the market's been at an area. And generally speaking, if the market is, let's say, 20 seconds on one price level and 10 seconds on another, there's going to be more volume on the 20 second because there's just been more time to transact. So they almost match each other perfectly. So either one you use, I don't think really makes much of a difference. I've tried both of them. I just prefer the way the volume profile looks, to be honest. It just looks a bit nicer than the market profile. But completely up to anyone. Yeah. So do you exclusively trade NASDAQ or I think you mentioned...
So yes, actually, since 3 years, actually, I've been focusing on the NASDAQ, and actually, I call him my boyfriend almost, because I'm almost in a relationship with the NASDAQ, because it's just NASDAQ. But I am sort of thinking I should expand a little bit, because it's just I really love the NASDAQ, and because I have been in the NASDAQ for 3 years, I am like, okay, I know the levels and I feel very confident trading the NASDAQ. I started out with the S&P when I did the market profile. But at some point, yeah, it was just NASDAQ.
S&P, yeah, S&P is slow a little bit.
Yeah, but I would like to expand to oil and maybe gold at some point. And I do feel like, it's time to branch out a little bit, because I need to let go.
Agree.
I need to let go of this relationship.
I would say join S&P. It's the better instrument to trade.
Well, I use it. I look at the S&P when when we have when there's a difference when the NASDAQ doesn't make a new low or high.
Yeah.
We call it SMT in ICT terms.
SMT.
Yeah. So, and that's when you have the best entries, when there's SMT between the S&P and the NASDAQ. So yes, we can't go without one of the other. But yeah, should also. Yeah.
We have like a running joke here. Eamon is all about NASDAQ. I'm all about the S&P. And we have a kind of friendly battle of which instrument is better. I am obviously say that S&P is better. It's more stable. It moves a bit more calm. It respects levels more. Eamon's, the NASDAQ, it moves a lot more. You get many more points.
I love it.
So there's a good little battle here.
Well, I'm with Eamon too.
Thank you.
I was slowly trying to rope you in, be like, join.
We're going to rope you in. We're going to rope you in like 3 minutes, right? No, but we all have a preference. Do you trade anything else, or do both of you trade anything else beside that?
Just the S&P for me. I mean, I could trade the NASDAQ, but I don't see the point trading both, because if it goes up on the S&P, it's going to go up on the NASDAQ, vice versa.
Exactly.
You're just doubling your risk, essentially.
And also the way we trade, like, there is a lot of opportunities just on one instrument, just on an NQ. So for us, let's say if we focus just on NQ, like, we can get as much as opportunities. If we are focused, let's say, and we want to take a lot of opportunities, we can. So for me, I think NQ is enough. It's moving fast, good. So yeah.
I trade on my live accounts. I trade MNQ, by the way. Mm-hmm. So and then because I can scale in, and I love to scale in, scale out, because it's fast, and I like to take profit. So then I just take I just trade sometimes just only with 2 MNQs when the moves are when we have a good ranging days, and when the ranges are big, it's just 4 or 5 max sometimes, and I'm happy. Then you can still make a lot of money with that.
Yeah, that's all you need. Absolutely. I also see in the chat, Robert's here. Robert, nice to see you again. He's a regular viewer, Iris. Who comes every day, I think. I haven't seen a day Robert hasn't been here. And he loves NQ as well. So
there we go. Yeah, I can't
NQ
see
gang
the
here.
chat. Oh, I do see the chat. Oh, now I see the chat. Yeah, I was wondering, where's the audience? Yeah, okay. Okay, so another NQ.
I'm very ganged up today. Today I will trade NQ in the live session. I will join you all. But yeah, I mean, the markets. I just had a quick look.
Yeah.
It's slumped back
Let's
down
have a
to the
look.
lows.
There is a potential buy opportunity, but
See, I see a potential sell.
sell.
Yeah, on the S&P. In fact, I think it's lining up quite nicely, actually. I think I might take this. Let me just load it up. Double check I haven't missed anything. Oh, I don't know. Actually, it's worth it. It's got such a tight stop loss. Let me get my screen up really quick. I'll have such a tight stop loss. I think it will be fine. I'm happy to actually risk that. So what I see is a little gap created right here on the volume profile. As we touch in, I'm expecting a reaction. So the moment we're in it, which we are, I'm entering or sell. I'm not even going to look at the footprint for this one, but I did spot there are, 1,000 contracts here. Oops, wrong one. Yeah, I did spot, 1,000 contracts there, another 1,000 there. Yes, we did break down. I don't think it will probably go much lower, but I'm expecting maybe at least kind of back to the low of this candle. It's a really quick scalp. But if we break this area, that's straight away out. So a very, very tight stop. It could work out, might not. And it depends if it obviously fills the gap. I don't think it will. Well, we're getting there. We're getting there. Let me check on the 1 minute real quick. So it's approaching where my stop would be. My stop would just be here above this black line. Yeah, those buyers are coming in quite aggressive.
Yeah.
Yeah,
I would go.
I'm seeing...
I wouldn't take short at this. I would not.
I'm in for a buy.
Yes. Because we're yeah. And I would wait for my next model. That would start at 1409.
Let me just check on this really quick. Ooh, I can't see. Zoom out. It's taking forever to zoom out. Come on. Zoom out.
You might go lower a little bit before.
There's no gap on the volume on this one. I should have double checked. As long as it holds for a bit, all I want is a small reaction. I don't think we're going to go back down to the lows because I know this is the area you want to buy in. But I'm expecting just like a little reaction, maybe back down half the candle.
Yeah, it took liquidity. Then there's a nice wick on the 3 minute. That took the liquidity of the pre-market session. So we did take liquidity. Yeah.
But these buyers are quite effective. The cumulative delta is very much on the sell side, and the buyers are pushing it up quite easily. So I think it's going to blow right through here. I think it's kind of stopped a little bit, but there's not enough sellers or to push it back down. So I think this is a get out trade, as we call it.
Yeah.
So that didn't work out.
We've got a nice breaker forming. Let's see if the breaker is going to be created. Those candles on the 3 minute. Let me just go to the. Are you on the 1 minute, Sam? What is your time frame you're on? If I refer to
this
candles?
is 15 minute, and the footprint is 1 minute. Yeah.
Okay. So also on the 15 minute, you see the 1 o'clock candle. That might be a nice breaker. So for me, that will be Yeah, but then again, we've also got a candle to the downside, which could be used as for continuation to the downside. It's a difficult one to read, to be honest, with this large down candle, and then which is a nice fair value. Well, let's just watch.
Can I share some just to show?
Yes,
the trade?
absolutely.
Yes,
Absolutely. All right, you should. Okay, you're up.
Yeah, so for me, the idea of the trade is first the daily. We have 3 hours left for the daily candle to close. So the way I see the daily candle closing, maybe it's rejection a little bit. So we create the low. We took the lows, the low of the day. We create a new low for the day. And the way I see the daily candle is coming back and closing here. So we had just a demand big bearish candle. And on the footprint, if you could see, you can see here on the 5 minutes, we have some big cluster at the bottom of the candle. So I am expecting it could be a sort of absorption. So I bought somewhere here. My stop is really close. So it's got stopped out.
That's the reaction I was waiting for. I was a bit too quick to get out of that trade. But that was the reaction I was waiting for. Just a quick reaction to that area.
Yeah.
But it was a very, very tight stop, so it's not the end of the world.
But like just too short from here for me, why I was a little bit, let's say, 50-50, just because of those cluster here at the low, and we are seeing a reaction. That's the only reason why for me it was like, okay, maybe this low here will be protected, but yeah.
I ultimately agree as well. I think ultimately, like, I wouldn't want to really be shorting the market more long term until we break below that gap at the bottom. But it keeps rejecting that, and we keep pushing up. I mean, we're very much in no man's land. I mean, the reaction has happened.
Yeah.
I'll be interested to see. I don't think it will break the low. I think you're right. I think the low will be protected. There's a lot of sellers trapped there. I think, if anything, if you pull out a Fibonacci, you'll probably see some sort of, on a 1 minute chart, like a retracement, maybe a maybe on one of the fib levels and the golden ratio, maybe, who knows. But
and especially also the way the market moved down and it came back so quick. So that's also something. That's why I was also open for a small scalp, because it went down fast and then we took the previous candle low, came back again to the range. So that's why
and now it's making its move back up again. So that's part of scalping. Sometimes it's timing, isn't it? You get the timing a few seconds or even a minute too early, too late, and it can mess up the whole. Like, theoretically, both our trades, even though we went the opposite directions, could have done well, right?
Exactly.
Because your one, it's going up now, and I think it will continue to go up. We just timed it a little bit wrong. But that's why you have to have a really, really adamant stop. You can't be in the business of moving your stop loss constantly. And all right, while it would have theoretically saved you on this trade, there will be that time where it won't save you, and you'll end up losing everything.
So do you like to trade those consolidation areas? You just go from high to low. Is that something you really are, you trained yourself to be, because you said I scalped a lot today. So you've been into this consolidation area. But
if I will show you how.
Let's have a look.
So as Sam know, like I am, let's say when we are ranging, we have ranging market. Like before even starting the session with Sam, he know that I had a good day. So I like to trade ranges. For me, like most difficult days is when I don't see the trend is coming and I'm expecting, for example, a range, and maybe I get stopped out 2-3 times and I call it a day. So, but I'm trying to work on trending market more. For example, like yesterday, what we had yesterday. But yeah, so for me, like I have a specific way how I draw my levels. But if we will focus just on, let's say, just on the confirmation to enter. So for me, for example, this trade here, of course, I took a couple of trades here, but let's say this trade. So for me, we are in a demand. It's area for buyers, and we have big momentum candles. So for me, I like to trade those in. If we are ranging, I like to see, if I want to buy, I want to see a big momentum candle, and then we take this previous candle high, just sweep it a little bit and come back again and starting to push. So for me, when this sort of pattern happen, like I just buy, because also there is an absorption. So if we check this red candle here, what we have inside, you will see that the biggest cluster of this candle is this -75. So this -75 is the biggest cluster on this candle. So for me, like if they are real sellers, normally they should straight away push the market down, because the biggest cluster is at the low of the candle, let's say. So the moment, let's say, we take the low and straight away we came back and we start pushing, I know that this is just a potential absorption of sellers, and then I join. So I took actually this trade, I think somewhere here, and I took profit. I took profit here, and I repeat the same process, just absorption, momentum candle, wait a little bit to see the sign that we are reversing, and then enter. Of course, this concept is not working at all when we are trending. So that's why, like I have let's say different models. So ranging is a little bit different. When we are trending, if there is a news on the pre-markets, I look, let's say, for the biggest clusters at the top 15 minutes and trade the continuation, the continuation of the move. So this is basically like how I.
So I see Robert. I see the chat now. So Robert she's talking about ICT in Inner Circle Trader. Yes, ICT Inner Circle Trader. So I am one of those people that got the virus of ICT, and I think somebody said I'm an alcoholic. So because alcoholic, because it's ICT says there is no buying and selling pressure, but it's an algorithm that is making the market. And I'm just looking for those little signatures. But I do believe those footprints. It's very interesting because I think it's just, if it's so consistent, because if you say there is like that amount is there on the bottom, and it works, because if you trade like that, it's obviously works. It all comes down to risk management, whatever we do, right?
Oh, 1,000,000%.
It doesn't matter which concept or what we trade. It's just risk management. Either we overtrade and
So I like that. Alcoholic who trades.
Alcoholic, yes. I read that somewhere.
Robert calls the NASDAQ NASCrack. So you're an alcoholic who trades.
Oh my God. I really need my where's this going? Yeah, no, that's definitely. But no, I never had I'm happy that you actually mentioned today, like I overtraded, because that's my pitfall sometimes as well. Even though you've got your technical analysis and you really made a lot of, like, at some point you realize, okay, I know my setup, I'm confident in my setup, I'm consistently profitable, or I'm getting there, and then you have these moments that you're like, why am I doing that? Why am I overtrading? And it's sort of like because I've never been addictive to anything, whatever. And I'm like, but it feels like sometimes like an addiction. And then I'm like, I just found out like half a year ago, like that is something I do have sometimes. And it's really weird, and it's like a mirror. So what is your thought on that?
I think you're absolutely right. I think every trader out there has an element of addiction to trading. And I mean, we've all spoken about it before, and we all say we discovered that all of us had what we call a casino account or a bully account, basically a small account where whenever we feel like we want to trade a bit too much, or maybe do a bit trades a little bit outside of our, overall kind of risk management, so to speak, we'll do it on that account, the sacrifice account. We don't care if we lose that money. It's just kind of the playful account, to kind of feed almost that addiction. And I find it helps as well, because then you have your serious account where it's your bread and butter. You don't want to mess around with that. You stick to the rules. Everything's percentages. You make sure you don't risk any more than 1% per trade, etc., etc. And then you have your fun account where you can go a little bit crazy, do whatever you need to do. Yeah.
Yeah, I'm happy to hear that, because I thought I was really struggling with that I found out getting better and being. Suddenly you reach a certain level, but then you have these, like really that you start, doubting yourself. But now I know it's a normal thing, so I can still do my alcoholic and NASDAQ and have my.
And also, like, it depends. Like, trading is a lot subjective. For some, it's over trading. For some, it's not over trading. For some, like four trades is over trading. For me, 4 trades, it's not over trading. So
I agree with you. We have a lot in common.
Yeah. So for me, it's just definition. Everyone has his own definition. The only thing is, for me, like, if it's working for you, it's right. So there is no right or wrong. If it's working for you, it's consistent. That's it.
Yeah.
So
I think the
just
issue.
For example. Sorry,
Sam.
Just for example, today I took, like, I don't know how many trades, like more than eight trades, just because, like, there was good opportunities, and like now I am seeing the trades. I go break even quick, and in my plan, for example, I can re-enter. So sometimes, like, it counts 1 trade. If I count like this, it's maybe 4 or 5 trades. But if I stopped out, break even, re-enter, okay, it's 6, 8, 9 trades.
Yeah.
So, yeah.
I think for me, the reason a lot of time I do overtrade is if I put too much emphasis on the dollar amount that you make. Because we all come to the start the day and we kind of have a rough idea of what would be nice to make today. We have that kind of amount where you'd be happy with $1,000 today, or whatever it might be, right?
Yeah.
And if you don't hit that, or you've done a few trades and you're maybe only a quarter of the way there, but that's all the market's giving you, because the market's just not moving as much. It's not trending. It's not, or in Aben's case, it's not ranging, or whatever's most optimal conditions for you to maximize your profits. I find I start over trading. That's when I'm like, no, I'm not happy with that. I'm going to go that little bit extra mile, and then inevitably you lose some of it, and then you have to try and make back to what you lost, and you kind of have that little battle where you're just kind of going up a little bit, maybe going down, and then at some point you're like, okay, I got to get out now. I got to stop, because this is getting dangerous. That's how it is for me, at least. But sometimes, the best days are the ones where you enter 1 or 2 trades, US Open, they hit your target perfectly. You're able to scale in. You've made a dollar amount you're happy with, and you can just finish there. You walk away, you feel great. Those are the best.
But do you walk away?
I do. When it's a day like that, I do walk away.
Okay.
Yeah.
It's very interesting.
Please,
No, go ahead.
Oh no, for me, just about overtrading. Like, the moment I feel overtrading is when I take a trade and I got stopped out and I re-enter a couple of seconds after. So for me, at that moment, if I do this pattern, I know that I am overtrading. So if I am not doing it, even I take a couple of trades, it's my setup. So stop or take profit, I wait a couple of minutes, breathe air a little bit, and then re-enter. But if I'm taking back-to-back trades, that's a bad sign to stop and call it a day. That's
terrible. That's 100% true. I've caught myself doing that a few times, and it never works. I don't think it's ever worked out in my favor.
We're all guilty. Yeah, it never works. Yeah. So I read Robert. So Robert says, when I went to look at ICT, that's basically what I used to do when I was high frequency trading and winning at like 93% of the time. Well, that's pretty good. So
93%.
That's a lot of trades, and also 93%. So then you must be very rich right by now.
I think
No, but
Robert's the
it's
secret
interesting.
billionaire here.
It's so
93%.
Well, you know, when the market, I mean, you know, honestly, sometimes when you have some models and when with ICT and you do read the L and the you can recognize the signatures and do the macros, you basically have each hour you can have a good trade. But lately the market has been quite, I don't want to call it hostile, but just it doesn't give the setups, because we sometimes have one move in pre-market and then it's just consolidation. You guys like that, but for me it's like, okay, I don't want to be stuck in consolidation, to be honest. So, okay, hold on. I have proof of my Forex account, but I think it's messed with my mind. I have a hard time to take a loss now. Yeah. So I just lose control. Yeah, I totally get that, because once you get into that mode that you are on it, yeah. But yeah, I think ICT is, for me, it was a game changer with the time. But Robert, just get back into it and just do what works for you, I guess.
It sounds like for Robert, it was just like you said, it was a psychological thing. I can totally see it, because I remember when I had probably one of the best winning streaks of my trading career. What followed was it truly messed with my mind. Like I couldn't accept losses anymore.
Exactly.
So I think almost to be a good trader, you have to be good at losing. And I think a trader, there was a book, the best loser wins.
Yeah, the best loser. Also
Tom
Hogarth. Yeah,
that's it. Yeah, absolutely true what he says in that. You know, to be a good trader, you have to be a good loser. Know when to cut your trades and just accept it, and be happy to lose in a weird way will make you a better trader.
Exactly. A stop loss is nothing else than that stops you from losing, and it's actually not a loss; it's actually a win. Yeah. Because it stops you from losing more money. But I got very angry. I had a time that I'm like, you know, you're looking for perfection, because even though you have your technical analysis and you have knowledge about the market, but then comes execution. That's actually what I think is the getting good execution. And you know, you can market order in and just add your stop loss, but putting a limit order in at the right spot and waiting for it, having patience. Execution is another, it's for me also my next level where I'm working on right now. Because I find that, like, okay, my execution is not that good. If I'm really, I can market order in, but that's the easy way. But proper execution and getting out, and you have obviously your levels. But yeah, it's you're not, like you said in the beginning of our session, you're never done learning, and there's always something new that you have to work on. And then you have the psychology part. You can have your technical analysis right, you can have your setup right, but then again, it's your mind. And then again, we don't want to lose. And sometimes we have the period that we do, you know, that's why I'm traveling now and I'm moving, and my kitty cat had to go to the hospital today. I'm like, you know what, I'm not trading. No, she's all good. We're all good.
Oh, that's good. That's good.
I was actually I'm doing the paper trading at the hospital. I was just waiting and just, you know, going into the market. But yeah, for me, it's actually a good time. Oh, I think one of my cats is going to jump now. Actually, she goes with my fortune teller. I'll show you. This is my. Here she go. Look at that.
Oh, wow.
It's my
very
little...
beautiful.
I really look like a fortune teller.
Beautiful.
Now, right? Yeah. Hello, Dolly. Hello. Yeah. Okay. But yeah, I have a broom here as well. So for me, it's also this. I'm using this time because I made my money in November, December. I got out. Also, I was in crypto, and I thought, you know what? I'm going to train myself to be in the market, just look at the market, but not trade, and just do paper trading. And so I'm going to get back into it, but just doing paper trading now. And I'm actually training myself to have those losing trades. So it was sort of like my 2 losing trades actually felt like a win today, just accepting it and just going, okay, I've lost. But I knew it because I already had my I was looking at the market. I'm like, it doesn't look, and I still went in. And then I'm like, okay, you actually knew that it wasn't your setup. So, but yeah, we're never done working. And psychology, execution, and technical analysis, 3 different things, but equally important. And the market is not made for us to win, so we always have to think about that. And that's it's about fear and greed. And sometimes like, oh my God, they got me they got me mentally, even though I knew it, and they got me, and they know exactly how. And then I got really angry, and like, oh, normally, it goes to your trade, and then when it's just a difficult market, it just doesn't go to that level that you think it's going to go, and it just goes down. And at some point, I got angry. I'm like, oh, they got you. Yeah. But yeah, it's interesting.
No, 100%. Oh, the market did drop down quite a bit. I mean, I actually entered perfectly, I would say. I probably exited at the worst exit ever in history.
Yeah.
Can I show you something again? I want to show you something again.
Yeah.
With the news candle.
Yeah. There was a news like about Iran's senior army something. So.
Oh, is it? Yeah.
Yeah.
Oh, okay.
Window. Here we go.
Tom wrote, to your point, I learned more from my losses than I did from my gains. Absolutely, yes. Tom. It forced me to dive into my trades further. 100% agree.
So it's exactly at the 175 level. Exactly here. This is the news candle. This is just my deviation from the news candle. 175 exactly. And let me see if it has a confluence with something else. I'm so excited when I see these things happening. Stop sharing. Let me see if I see anything else. Yeah, I'm not going to go too technical with my. Otherwise, I'm too much of a nerd for you guys. I don't want to.
I think everyone in the trading space is a bit of a nerd, so don't worry.
I don't want to overdo it today. No, it's okay. I'll just leave it at that because I'm just excited. The 170. I think it's going to go lower though, a little bit.
Yeah, I mean, now that it's broken those lows,
yes,
I have a few areas on the chart where I've got my eye on it. It's rejected off the first. If I really quickly show, so how I find my areas is all down to volume again. Anything where there's a drop off in volume, or there's low volume trapped between heavier or bigger volume, I like to basically mark it out. So again, it's not great, but on the volume profile, it's a bit lower volume there where there's a drop off. So a bit of a reaction occurred. And that's essentially why I did at the time short it here, because at the time the volume profile had lower volume there. It's now been filled when it went back in, but originally there was a drop in volume, just like a little gap in volume here where these two black lines are, and that's why I drew it. And that's why I did short it. And as you can see, there's a tiny drop in volume there on the volume profile. It's not great, but it's ever so minor. So my next move would probably be, if it comes up to here, I would be looking again for a nice little scalp. But there are many areas below that it has to break. And what I forgot about is we did have a gap on the weekend, an actual proper gap. There it is, nice little gap here. So we opened up Monday, Monday UK, or Sunday technically evening. We opened up with a nice big gap. So I am expecting actually the market to fill it at some point. So I might start shifting my bias more to the bearish. We got bearish structure now, lower lows, lower highs, etc. Starting to see that structure kind of occurring. It's a bit messy. There was a bit of a break in structure earlier today, but it very much recovered. We're starting to see that bearish structure appear. It is a bit messy, but if you kind of squint your eyes, you can kind of see it. But yeah, I mean, the market's been doing this recently quite a lot, kind of going up and then going back down and going up, going back down. It has kind of recovered from the crash, I would say. not fully, but pretty much it's recovered. So I think people are still considering everything going on politically in the world, and
Exactly.
I think people are still a bit quick to hit the sell button on every little thing. They're much more likely to be spooked based on what happened, last month, or was it month and a half ago, when we really had, quite a crash. So I think people are still a bit more spooked of any kind of sign of bearish momentum, and people are happy to sell now. So I think we're seeing those kind of drastic moves down are being exacerbated just by people's psychology as a whole. Whereas when the market's in a really strong bullish phase, especially the S&P or the NASDAQ, people aren't that quick to sell. They're generally with the mindset S&P, stable, goes up year on year, 6% return, whatever. People are not likely to sell as easy as they are now, considering what's happened.
Yeah.
So, yeah. But yeah, I mean, we'll see. I mean, it's a bit late in the day, but I would be interested if it does go back a bit higher up. I would actually like to short it. So I'll set an alert and we'll see what happens.
So in time-based, the 1409 is also very is a time that I do trade a lot. And it can give very good setups around this time. So when I see, actually the model, if you actually look with the trade, there was a good trade already. But it was very unclear at some point, right? Because we got a good trade momentum down, then got some consolidation, and we took liquidity, but then we had a little move back up, and then again another move down. But yeah, I would think maybe we have a nice move back up, and then maybe some continuation to the downside.
Mm-hmm. Yeah, I mean, if there is a retracement, I think I'll definitely.
Yeah. I agree.
Be jumping in.
Think
sorry, go on.
21,870 on the NASDAQ looks very and maybe even a little bit lower. Might go on paper trade later on. We'll see.
So what's interesting, which I didn't spot. So the area I wanted to short at, I said if it gets there, and this is why sometimes changing time frames can really help, because you don't miss. So on the 15-minute, it looks like it just went straight through. It's never gone back to here, right? But if I go on the 5-minute, you will see it already actually retested it, and the trade that I was waiting for already happened. So we blew through, came back with this wick into that area, and we shot down again. So yeah, I mean, that's how quick sometimes these trades can set up and go. So on the 15-minute, I didn't even notice. I thought it just looked, it just went right through. It's never come back to retest, but it very clearly on the 5-minute, it already retested it, came back. So I wouldn't really want to jump in again once it's been tested. I don't like jumping in again. Does that make sense?
No.
So the fact that this area has already been tested, if it goes back, I wouldn't like it.
So on the daily as well.
Leg.
I'm sorry.
No, carry on. Sorry.
So on the daily on the NASDAQ, the Friday the 13th, the daily low is exactly equal to the low of Friday the 6th of June. And the 6th of June, I don't know if you also, if you have a candle without any wicks, we call that a devil's mark. That is like a draw on liquidity. So the 6th of June on the NASDAQ is just a flat candle with an equal low created on Friday the 13th. So I already had a line there. Like they're not going to let that just be there. They're probably going to take that liquidity and then go back up or something. So I'm still expecting it to go lower at some point and take those equal lows. But that is at 21,683 on the continuous contract. So that's sort of like 320 points down, or 280. So there's still a lot of movement down, but I mean that's too juicy to let that just stay there, right? Do you have them on the S&P as well on those 2 days?
Pretty much. So on the S&P, we had on the 5th of June and the 6th of June, the lows were the same. And then on the 13th of June, I would say it's pretty much level. I mean, it's gone. We're talking a few points a bit below, but
okay, so
pretty much level. Yeah, pretty much the same. I wouldn't even call that taking it out, to be honest. We're talking such minor.
It was S&T actually. Then we would have taken that move up as S&T, right? But then again, it's still
On the Dow Jones, it was taken out properly on the Dow Jones.
Okay.
So I don't know. Maybe tech stocks are just holding on a bit better. And generally speaking, to be fair, tech stocks they do hold. I mean, they move more erratically, don't they? So,
like on ES. Sorry. Yeah. Like on ES. On ES, we have the gap on Sunday, but NQ there is no gap left, I think.
Oh, really? Let's have a look. No gap at all on NQ. Let me zoom out. No, there is still a gap on NQ.
I don't have it either.
Beginning of the week.
Beginning of the weeks. What time frame?
Do you mean NWOC or new week opening gap?
No, weekend gap on 15 minutes.
But it was filled.
Not on my chart. Let me
let me show you how.
Okay,
how
like show me.
Sunday opening, and show me yours.
It filled it on Sunday when it opened, right? Straight away.
Yeah, straight away. Yes.
I see.
Show
so
me.
we call that in ICT terms is the new week opening gap, and they are magnets. So but it most likely will go back to that. I wouldn't be surprised today we go back to that level, to the 21,864.
You see, Sam? This is
what? That looks completely different on my end. No, what's going on?
You have
what date are you looking at? I'm sorry.
This is Sunday open. This is Sunday, and this was the gap. Yeah. It was filled straight away. And
15th of June.
Yeah.
Okay, let me show you how it looks on my end. That's very confusing because I got the futures as well there.
Have you got the adjustment on?
So
yes.
I'm not sure. Let me just show what I see.
Yeah. Okay.
There's the gap.
And
yeah. Okay. So what you do? You see the BADJ?
Yes. Like
just press that.
Trading hours.
No, either is okay, but do the B adjust.
Where you looking at?
Down on the right, all the way.
Where are you seeing this? On the right.
All the way to the right, and then on the bottom. Yeah.
Okay. I'm sorry. What is that? I've never clicked this before. Adjust for contract changes, right? Okay.
Yeah.
Interesting. I didn't know that was you could do that on TradingView.
Yeah, because we had contract change, I think this.
Yes.
So now you see that we had a rollover, didn't we? Right.
September contract, I think.
So now you see it's filled, right?
Because I was looking at like, damn, been filled. Yeah. Now 100% has been filled. Yeah.
Yeah.
It definitely got filled instantly. Okay. I wonder if the ES is the same then. It must be. So I've been looking for that gap on ES for so long. It's probably already been filled. Let's have a look. Yeah, of course, filled as well.
So in
ES.
ICT,
Okay,
so we call that NWOG. So NDOGs and NWOGs. So and the weekly ones are NWOGs and the daily ones are NDOGs. But they are magnets, and even though they're filled, they still could be a magnet. Like especially on Monday, you can see price goes a lot from NWOG to NWOG. It just sort of like because the it's creating the weekly profile. So I have a special indicator I use. So I have them like for like 7 to 8 weeks on my chart, sometimes even longer. So I have a special chart, and it's amazing how you see how they are used as magnets. So even though they're filled, they still can be of importance for certain levels during the week. So I always have them on my chart. Yeah, I've got so many different charts and with a lot of data. So people, I don't want to overdo because you're like, oh, what the hell does she have on her charts? But that is also one of the things that I use a lot. And NWOGs and NDOGs.
We would love to see them on the.
You want to see it? I can show. I don't mind
it's quite interesting. Yeah, why not?
Okay, let me show you another.
Yes,
chart,
Sam. Am I right, Sam?
Okay, then I will go with one that
absolutely.
has a lot of data. You guys are like, if you guys like to see that, let's do it. Okay, you can always tell me no, shut that down. Okay, here we go. Share screen, and window. Let me see. Where is my nerdy screen? Here you go. So I have, this is my September. Oh, is it old? September. Oh no, it's good. I rolled this one over, right, from June to. Okay, so here, is this a screen? Are you seeing my screen?
Mm-hmm.
This one?
Yes.
So this is the first, the red is the first presented fair value gap from Friday. I've noted that here. You see that? You see how beautiful the bodies stay in the fair value gap? And so this pink line, the pink line is event horizon. That is the mid of between two NWOGs. So that's also a draw on liquidity. So we see now that this is respecting. These measurements are old opening range gaps that I measured. Opening range gaps are gaps that are when the market opens at 9:30 and from the close, like if I would go on RTH, you have a close at 4:15 and opening at 9:30, and then you have a gap. I always measure those because those help me in the morning to trade my to do my morning trade. But I always leave these measurements on like 25, 0.33. Because this one was unfilled, so that gave me also an indication like if we go down, we're going to fill this gap. I can show you on my. I don't want to. So let me just opening range gap. Here we go, and then I have to. I've got to keep the last 2, 3. Here we go. Okay. So this was the range yesterday's, right? 16th of June, the yellow one. We went all the way up. We touched it here in Asia, and then we bounced around it, and now we're filling yesterday's gap. So 0.66, and then we have this other confluence like this first fair value gap of Friday. That is the first fair value gap between 9:30 and 10 o'clock. And so I'm expecting it to fill today, this whole gap. I wouldn't be surprised if we go down lower and fill the whole gap because we left it open. If not, we're just going to go up again, and then it could bounce off the 0.66 level. So this is today's gap. So here you see this gap. So I also did the calculation in this gap. You see For me, why I was confused, because it didn't touch the 0.33. I was like, oh, we might go back up, because normally it always, when the market, when the algo, when it's not manipulated, it is quite, it's quite reliable, because here you can see exactly we touched the 0.66. It went through it. Here it did not even reach it. So for me, it was like, oh, we're not done yet. We're going to go higher. So that was my confusion as well today.
Yeah.
Like I said, it's very manipulated. So I use these opening range gaps, and this is an N walk, and this is another. This one was the N walk we were just discussing, which one was already filled. But like I said, you see here. I hope you guys are not like, oh my god, it's a lot of information on a chart.
No,
it's interesting.
New stuff always fascinates me. Exactly.
Okay. Yeah.
For me, if I may ask, I'm looking at 555 minutes. Is it like 555 minute time frame or?
Yes, I've been. Yeah, I hardly use it, to be honest.
I just realized that.
Yeah. I've been working. I don't know if you have ever heard. He does a lot of Zooms. Kit is one of those coaches. He's an ICT trader as well, and he's a magician with numbers, and he has these weird time frames, but there's some interesting things you can see on them. But I never use them anymore, to be honest, and also not 999 as well. I should get them off because I hardly use them. But I do use the 1, 2, 3, 4 hour, 3 days, sometimes 3 months when I really look back into some things. 90 minutes is very interesting as well. 45 minutes as well. When I go to my higher time frame analysis. Let me show. Okay, so it's interesting to see how the price is really staying into this first fair value gap of Friday and using the 0.66 of yesterday's opening range gap. So interesting to see if it's going to fill. I think if it's going to go lower, it's going to go much lower to this level, because we have previous day low here, as you can see, and yesterday's midnight, which also was never touched, which also is a draw on liquidity. So yeah, let me quickly have a look at the time. Let me show you another chart, the higher time frame analysis, then maybe about the DTT. Yeah, here we go. Wow. I'll show you that as well. And even though I'm not trading, I just love analyzing and just going over these things, because it's so fascinating, right? And actually, because I'm not trading. Yeah, because I'm not trading, it's actually, you see much more than instead of you're being in a trade, right? So it helps you study. Yeah. Let me just show you another trade. So another trade. I really have to credit the DTT guys, because they changed my and they figured out those root candles and those yearly and those weekly candles. Okay, hold on. Window. Here we go. So this is the DTT, the weekly. So this is higher time frame. So that goes from 4 hours and 15 minutes. So here we go. Let me just go here. So these are the weekly. So now we're in the weekly AMRP level. So this is a root candle on the weekly. So those are draws on liquidity as well. I could overlay the daily, so you can see how interesting it is. And this helps me a lot in my higher time frame analysis to see, okay, now we are in this AMRP. So at some point we will go back up, but it could go all the way here, all the way down to this root candle, and then go back up. But let me overlay it with the intraday. And I cannot show you it's also a yearly, but that's really interesting as well. But no, we're not going to do that today. Let me just overlap it. Oh, it does not. Okay, see, that's the thing. The weekly goes to the 15, and I thought the intraday doesn't go. No, I can't. That's weird. Okay, no, I can't do it. I'm sorry.
It's okay.
Anything I can. Because the weekly, the intraday only goes to until 5 minutes, and the weekly goes from 15 minutes. But yeah, so I would first, like for example, for today, I would look at the intraday, the weekly. I'm sorry. Like, okay, where is the weekly? And then that's why I said, okay, we go lower. This is an interesting level because that's the root candle, and here we have another level. That is the AMRP of another AMRP level. And then I combine it and then look at the daily intraday, like what levels coincide with it. And let's see how low it goes. But yeah, no, definitely it's going to go lower. I mean, if you look at the market now, that's just, well, no trades, but it feels okay. Not making any money, no shekels today.
It's always good just to sometimes take a bit of time off as well. I love the fact that you're traveling a bit as well. Travel does wonders to trading. I mean, I remember originally I always thought, but if I'm traveling, I'm not going to be trading. Therefore, I'm going to lose money. But no, because you come back from a holiday or from a vacation, well rested, you feel good, you just clarity, all the stress is gone, and you perform so much better. Than when you're when you're burnt out from too much trading, so
exactly,
it's really good for the soul. I think it's definitely something that all traders should do. Just take a few days, a week or two, book a cheap holiday somewhere in the sun, just lay down, do nothing.
You are talking about me, Sam, because for me, like I thought the same way. If I go, I will miss a lot of things, and I don't want to break the momentum. So I'm going like steady, good momentum. So I'm thinking if I go now for a holiday, I will break the momentum. So I have some internal fights between this side and this side.
Yeah, I'm telling you,
that's in the market. I'm still in the market because obviously time-wise, it's nighttime here, and I actually moved to South Africa because I have a passion for wildlife, and I used to stay in the bush. And at daytime I did voluntary work, and at nighttime then I traded. But now I moved to a different area where I'm not attached to any voluntary to wildlife organization. But I'm still, even though I'm not trading, I'm still doing analysis. I'm journaling every day. I journal the market. So it's not like I am, but this is a new thing for me. Like, okay, not trading, but still being in the market. Because for me, I just love the market, and I don't want to lose the feeling with it. But it's sort of like testing myself. Like, you know what, the market is difficult now. There are a lot of things going on. You're moving, and well, maybe that now I'm online with you guys, so I'm like, it's interesting just to also test yourself, to just be in the market, just analyze, and just don't trade sometimes, and just work on different things than trading. Because once you trade, you just focus on that trade. You just miss so many other things, right?
Yeah.
Actually, it's an exercise. It's an exercise to you are able to trade, but you decide that day, no, I'm gonna control myself, even though
I'm fighting the addiction.
It's a good exercise. It
is,
but it's hard.
I love it. I really love it. To be honest, I'm actually enjoying it, and it was a little bit hard in the beginning, because I'll tell you honestly what I did. So I actually emptied my live account in a way. So I stopped all my evaluations and my funded. Just I was like, you know what, I want to really not be triggered to go in. And my live account, I just transferred money back to my account, that it was actually that I need to put money back in to be able to trade it, because that was for me the way that like I don't want to be like, oh my god, let me just try one. You know how it goes, right? So that's what I did, and I'm like, okay, and you're going to be in the market, but you're not going to trade. So I just did that on purpose.
Good.
Yeah.
Right. If it works, it works. Absolutely.
I needed fantastic. To do that. Yeah. So it's the first time in many, many years that I am not in the market trading. So it's good. Yeah.
I think it's safe to say we all have taken breaks. I think the longest break I've ever taken from trading was probably, say, about 3 months or so.
But are you really not in the market then, or are you just really not trading?
Didn't even look at the chart.
Okay. So
really took, really just completely back on my head. Didn't want to look at it. Did a bunch of other stuff just to kind of, and then one day I just kind of got back to it. Now that was a long time ago, I'll be honest. That wasn't in recent
How long ago was that?
That was I'll say maybe 4 or 5 years ago. And
maybe
that was
after big loss.
That was after my biggest. Well, how long I've been trading? Since I was 19, I got into trading. I am now 34 on Sunday.
Wow,
so
that's a long time.
yeah.
Oh, wow, that's birthday coming up.
Yeah, I'm getting older, sadly. But yeah, but I would say I've been profitable 4 years or so. That's where I could actually call myself a trader, because I think about 4 years, I would say.
Okay.
I think there's always got to be a distinction made of when you started trading and when you can actually call trading your job, or where you can live off trading. There's 2 huge differences. So it took me a very long time to ever really become, I would say, consistently profitable trading. And yeah, but it was probably from the lowest moment of making the biggest loss, because the way it happened for me is I had the most incredible winning streak, made the most amount of money I ever made. Really, everything was, amazing. And then I lost pretty much everything I made in one trade, because I got so overconfident, so cocky. I put way too much risk on it, thought I couldn't lose. And the market very quickly humbled me. And that was where I took a break, and I came back stronger than ever. And I never made that mistake again. And from there on, I actually started seeing results. So I think that loss and that pain was necessary for me to get where I am. Yeah. But we all have stories like that. Every trader can relate to something.
Same pattern.
You have to go through it, right? Yeah. And then you grow. And that's why I think it's the people. I think anybody can do it, but it's just you have to be persistent and go through those motions and put the time in, and then you will get there. And some will get there sooner than later, but we all go through the same motions. And well, I'm actually happy to hear that you guys have like those accounts you can use just to focus, just to give those urges a little bit of because I'm sure I will get them as well when I get back in the game. But I do think when you're online, when you do these meetings and you have audience, that you're more serious. You probably are. You don't want to be. You have to have very strong risk management, especially because how do you? I think that would help as well, being more consistent, because you don't want to look like a fool. Like,
no, exactly.
In your own time, right?
Exactly. You're held to a higher standard, so you don't do things that you may have done if you were completely alone and no one watching.
Exactly.
But Iris, Eamon, that is time. That's the end of the session. It's been an absolute pleasure. Iris, it's been amazing meeting you. Thank you so much for coming on and showing your strategies and your algos. Really, really cool stuff.
Really interesting,
yeah. It's been really awesome. So both of you have a great evening.
It was nice to see you footprints as well and new stuff, because it's always interesting to talk to other traders. And I had a great time. Thank you.
Awesome. Good to hear. And thank you, Robert, as well, for always coming on, tuning in. We'll see you guys tomorrow. And have a great evening, everyone. Take care.
Same. Bye-bye.
Take care.
Bye-bye.
Thank you.